Welcome everyone to the live stream. Hey guys, welcome every single one of you to our Wednesday live market overview, the Fiverr stream. Good to see every single one of you here. And we have a very, very special, amazing guest today. Ellis, how are you doing?
Yeah, not too bad, thanks. How about you?
Amazing, yeah. Ready to kick the market together with you for the next hour.
Yeah, let's have a look.
Good to have you here.
Yeah, great to be here. Looking forward to getting on the live stream. Really, it's been a long time coming. So no, yeah, looking forward to it, and hopefully I can make this a regular thing. So yeah.
I'm sure you're gonna bring lots of value to our community, so it's amazing to have you as a part of our team. So guys, please welcome Ellis in the chat to our live streams. So Ellis, maybe you can share a couple of things about yourself so audience can get to know you a little bit better, about your trading journey.
Yeah.
And how did
of
you
course.
get here in the first place? Every trader has a story that brought him to the markets. So what is yours?
Yeah, so it's been about 3-4 years now trading, probably 2 years, 1.5 years profitably. So yeah, sort of got drawn in via the route most people are, which is through signals and all of that. They don't really work out in the end, do they? So after that, I sort of looked at analysis, joined a community, sort of put together my strategy and got it to a place where it was profitable, and just started trading with prop firms. Sort of saw the benefits of those. So yeah, my journey with those, it's been over a year now with prop firms. So no, going really well. Trading with a few, but Fivers is of course the best. Not just saying that. So yeah, really enjoying it so far, and was obviously lucky enough as well to have a funded interview with Jonatan. So yeah, really enjoying it. It's a tough industry to be in. It's requires a lot of mental resilience, a lot of periods of drawdown, both on the charts and emotionally. But so once you get to a good place with it, it's a great career, and it offers so much freedom as well. So yeah, that's sort of a bit about me.
So how did you get into the prop firm? So you started with your own capital, right? From what you said.
Yeah.
Okay. How did you get to know about the prop firm space in the first place?
Funnily enough, it was actually the London trading event, something like this. I went to in person. I sort of knew about prop firms online then, but I didn't sort of look too much into it. And the Fivers actually had a pop-up stand there. So I can't remember who it was, but one of the founders did a speech as well. And that's where I started learning more about it. So I looked into it, and from there, really, that's when I got involved. So yeah, quite unique to how most people find out about it, I suppose, because in-person meets and stuff like that aren't really common now, at least to what I know. So yeah, that's sort of how I came about it. Obviously failed a lot at the start, but yeah, sort of got into the swing of things and began giving it a good go, and yeah, started passing.
That's super interesting, like to get to know it in person and get to speak with people. This is really something unique. To be honest with you, on all the years, I don't think I've ever heard one person saying that this is how they got into the prop firm space in the first place. So you have quite a unique story regarding that. So the Fivers were your first prop firm as well.
Yeah. So the Fivers were the first. There are a couple of others as well that I was with that, not naming names, but they went under.
You don't need the name.
I'm sure.
Last anyway.
But yeah, the Fivers is one that I've just sort of been with throughout the journey, really. Obviously blew a couple and then got back on and carried on. But for me personally, I trade 4 pairs. I trade GU, EU, AU, and USD CAD. So spread-wise, the Fivers is great for me. So yes, really the best firm for what I'm trading, really. So yeah, it all just sort of made sense. So yeah.
Amazing. Yeah. Well, the spreads are incomparable to any.
They're great. Yeah, there's been so many times as well, like where I've had issues on other firms where I'm trading, and a lot of the times my strategy is quite unique. So I enter with limits. I'd say 50% of the time I'm getting tapped in and it goes straight away, or it hits stop loss. But a lot of the time as well, it comes so close to my stop loss and then goes in my direction. But if I was trading on a different firm, I'd get tagged out, and I found that a lot, which was quite annoying just because of spreads. But yeah, the fathers for what I trade are so tight, it's brilliant. So, you know, it's not really an issue for me. So yes, can't recommend it highly enough. So
I'd say this is the definition of a perfect stop loss placement. If your stop loss is still, you know, just there when the price is reversing right before it, I think this is great.
Yeah,
this is what
exactly.
Struggle with as well. Sorry for that. I'm babysitting alone this guy today, so he is saying hi to all our audience. Who do we have today here joining us? I see Nelson is here. Welcome, Ellis. Yes, please welcome Ellis in the chat. So he's gonna be our regular for our streams today, and I'm really looking forward to learn everything about your strategy, the way you trade, and it's amazing to get to know, you know, your journey as well so far with trading. Good morning, Void is here. Steven is with us. Welcome, Ram. Hippopotamus. Like, this is such a difficult username. Every time I see it, and every time it's difficult to pronounce it still. Steven is here. Where Jackie is here with us. Louis, amazing. Welcome, everyone. So, hey, Manish, hey, Adil, good to hear you, good to see you. Okay, would you love to know which school of discipline you learned trading from, Ellis? This one is for you. And that's a great
Yes. Gosh, where was it? There was a trader I learned from YouTube, and he opened up a community. I can't remember what his username was. It was called Will. I can't remember the surname or his actual username, but he had quite a big community at the time. So I just joined that. And personally, I didn't find much value from it, but the community was so big. There were so many people in there that were successful. And I actually came across someone in the group who was doing really well. So I just sort of reached out to them and just asked a bit about their strategy. And it was a bit of luck really for me that he was just willing to share. He wanted to, at the time, eventually open up his own mentorship, and he wasn't doing it at the time. So he wanted to sort of experiment with teaching someone and sort of having like a mentee kind of thing. So I was his guinea pig, which was quite fortunate for me. And he basically taught me the ropes to his strategy, sort of showed me everything. And yes, his strategy, he taught me, is basically the foundation for mine. I've made a few small tweaks based on things I've sort of found from my live testing and a bit back testing as well. Personally for me, I think live trading, is a bit more beneficial than back testing. But so yeah, that's where I say I learned from a community, and then from someone within that community. So yeah, and then just sort of YouTube videos as well to help out. But I think trading is one of those things where a lot of the education is sort of self-taught. Like, you know, you could give someone a strategy, but you know, they may not be able to trade it accurately. They may not be able to execute properly.
Yep.
A lot of it comes from sort of self-learning, figuring things out over time. And the big thing for me as well was when you go through losing streaks or you go through losses, really like hyper fixating almost, especially at the start, on all of those losses, and trying to figure out the commonalities between them all. So looking at your winners, looking at your losses, what's the difference? Is there anything you can filter out? And I got to a place where I was able to take out a lot of things from my losses that weren't affecting my winners. So I managed to get to a place where I could really sort of heighten up the win rate on my strategy. So yeah, long story short, community, person within that community, and then a lot of self-teaching.
I think you said two different, very unique things. First of all, you actually got a trader who was willing to teach you for free. Wow.
Yeah.
incredible.
Yeah, very, very lucky.
I'd say you get really lucky, and the fact
Yeah,
that the strategy was quality one, so the bait wasn't
yeah,
order and just average knowledge, but it was something that was working for him as well. But another thing that you said is a lot of learning in trading comes from practicing. I mean,
of course.
there is a saying that you can write your rules on the tallest building on the Wall Street and people will still keep losing money because obviously, first of all, every strategy doesn't fit for each person. That every
Yeah,
one of us is unique in a way that we see the market as well, that we perceive the market in a price action too. So I think it's extremely unique. And even if you have the same system, two entry points are not going to be the same, and they're still going to be slightly different. So it's I think it's something that important that you said, and every single new person needs to know because a lot of the times new traders are out there looking for the holy grail, for someone to just give them 1, 2, 3 step, and that's gonna be
yeah,
it for a profitable system, and it's gonna keep working forever, just like this. But in reality, I think also there is also, I think, another thing, the third that we can add to this is that it's also about the critical thinking. One of the best one of the most powerful things about being a trader and not the automated algorithm is because is that we can have the critical thinking about the market and we can filter out when the situation isn't 100% the way that we'd like to trade in, even if the rules are saying that this is a perfect trade that you should be taking. And
yeah,
but still have this feeling sometimes that not perhaps 100%, and you skip it because, well, you have this way of analyzing that something is wrong, even if it cannot put it in the rules, but it's an experience of the time that you spend on the chart that afterwards plays a huge role, I think.
exactly. Yeah, there's so many contextual factors that come into it that can separate like an experienced trader to a new trader. I mean, news for me is a big one. There's certain news releases. I don't know why, but for my strategy, I found certain ones are fine for me to trade on, even if the spreads go crazy. It generally is quite fine for me. And then there's other news releases where I found that they don't do too well for me. And from Forex Factory, for example, there's some medium impact news that affect me negatively, and there's some high impact news that don't really affect me at all. And that's just something I've found from live trading, just things you pick up on, and it's those small things that can separate someone from taking a 1% loss and someone taking a 2-3% win in my case. So yeah, there's a lot of that, and outside factors as well, like the charts is obviously key, but the whole mental side of things as well. If you're having a tough period in life, or you're studying or you've got a stressful time at work, there's so much stuff going on. You need to know when to sort of sit back and go, now's not the time for me to be pressing buttons. And yeah, there's so much stuff like that.
What did you do before trading, if I may ask?
Yeah, so I learned trading in my second year of university.
Okay.
I think first or second, I can't quite remember. But yeah, I was in university, so I can sort of say it now because I'm done with university, but I spent the majority of my time trading, learning to trade, learning all about it. My sort of mindset at the time was like, if I can come out with some kind of degree with a decent result, then I've always got that on the back burner and try and make this work. So yeah, I spent a good part in university just learning, studying.
But did you finish the university?
Yeah, I did finish university.
That's
I
the
did finish
difference
university.
between you and me. Actually, I found out about trading at the second year of university, and I dropped out. I never finished my.
Oh right. Oh wow.
I
What were you studying back then?
Sorry,
What were you studying?
I was studying completely different art, design,
Okay.
architecture.
Right.
It's a completely different side of the way.
Yeah, completely
This is
different.
finances and analytics and the math and psychology, and this is art, creativity, and flow, and all of this kind of things. So just two
Yeah,
sides of the.
two completely different things. No, I was doing business, so there was a bit of alignment there. I mean, business was something I was interested in, so to be honest, I kind of wanted to finish it in case. I think at the time as well, because I wasn't profitable, there was always this small niggle in the back of my head. It was like, I need something in case it doesn't work out. So yeah, I was sort of learning it throughout university, and then coming into the working world, I started working remotely, which I still am now. Sort of lucky enough to do that. So balancing that with trading is fine. And my trading style, I've only taken 2 trades this month, so I don't take many trades at all, really. So I don't need to be like on the charts all the time, draining my eyes. So it all sort of works out for me. But everyone's different. People have in-person jobs, and they're more familiar with scalping, and that's going to be something that's hard to manage. So yeah.
The discipline, though, guys, the discipline. Can you just give it up for the discipline of taking on the 2 trades in a whole month? Month is almost over, right? Like people have a need and an urge to take a trade. Have you ever had it? And if yes, then how did you deal with it? Or it's something that is natural for you to just be, calm?
Yeah. At the start, I had it a lot, where again, it would be that kind of thing of like, oh, there's this setup here which is great. There's a bit of news coming out which I know I shouldn't really be trading in and around, or something like that, and I enter and it turns out to be a loss or something like that, or I look at a trade and it doesn't quite fit my strategy, it doesn't quite fit my trading plan, but I try and make it fit because I've been sitting on my hands for 3 weeks. And at the start, there was a lot of that, and I found it quite tough at the start, because for me to then get the next profitable opportunity, I could be waiting another 2 weeks, and that's when I get the win. So it was quite hard to manage at the start, but eventually once I got funded, once I got payouts, it then sort of flipped entirely, and I was like, for this to work, I just need to be patient. And the other thing as well, and I mentioned this as well when I spoke to Jonatan on my interview, and it was something that I really stressed, is having a second income, whether that be your main income through a job or part-time work, or something online. Having that is, for me anyways, I found that so important mentally, to know that if I go for a month and I've had a break-even month, or I go for a month and I've made a decent amount, but not enough, or not as much as I wanted to, I know I've got that other income to sort of cover everything and keep me afloat. And and that means I can then trade, not to make money, but obviously to make money, but I don't have the pressure to trade to make money, if that makes sense. So that's something I would stress.
You can give the market the time to give you what you're looking for, instead of actually going out there and feeling the pressure of chasing it and finding something to have at least the chance of making a living this month. And I think this is huge, right? We keep talking on this lives and how important it is to have other incomes, or other, for someone it's going to be the passive income, for someone it's going to be an active income, but some source of income other than trading, especially in the beginning, because I think it's such a crucial moment. Like I went all in, all or nothing, and it was quite difficult, not gonna lie, in the beginning, especially also mentally, not only financially, but also really mentally. I've blown multiple accounts, like many accounts, to be honest, at the beginning as well, until I realized, and it took years to calm down, and it took years to actually be detached from the outcome of the trade. So it's really impressive that you got there so fast as well. Really.
Yeah, no, it's a tough journey. It's and I think the strategy as well, like the trading style, impacts it so much. If you're someone who's able to sort of get out of one trade and know that the next day, right, there's going to be an opportunity and it could be a winner, I think mentally that's so much nicer. It's also probably harder because you're taking losses, quite regularly. So I don't think there's ever that perfect strategy, really. It's a tough one. There's no holy grail, is there? But just got to trade what works for you, I suppose. And at the time, obviously, you dropping out of uni felt like the right decision, and it seems to have worked. So everyone's got their own route into it, and you just sort of got to make the most of the situation you're in, I guess.
Yeah, absolutely. And there is someone was saying, "How do you find a balanced trading school?" Because for me, it was hard to balance. Don't ask me, Steven. I just said that I dropped out. I was like, okay, trading, that's it. I'm just
Yeah,
going. So I left, but fairly enough, I left also because I was overwhelmed with studies.
right.
Because I was actually painting, doing architecture, doing design for my whole life. So when I was studying, I was 18-year-old at that moment, but I was working since 13-year-old as a graphic designer, as a
Oh wow.
actually for the pay. And until then, it was already 5 years, and it's been a journey where I realized that doing the art for an order of someone else, the way they want it, is something completely different than doing an art for creativity and for your own passion, because of course you get limited to the certain frame to what people want from you. So I was kind of having, you can say, the burnout with the artistic side of things. And when trading came into the game, well, that moment, it wasn't even trading; it was crypto actually. And
Oh, okay.
then it was trading throughout some time. But I was like, okay, you know what? I'm interested in this, so I'm gonna go all in there. But yeah, Steven, I agree with Ellis was balancing it all out very good from what we can hear, right? Amazing. One of the probably
It's
transitions. I can imagine that it wasn't so smooth as it may be,
no,
perceived.
I
But
wouldn't say it was very balanced. It's probably more leaning, yeah, probably more heavy on the trading side, to be honest. It's yeah, it was university, so it was a lot of it was remote as well, right? So this was after COVID, so there was sort of this sort of feeling at the university I was at where you didn't sort of have to turn up to lectures, you didn't have to turn up to seminars, like you could kind of get away with it without your attendance being an issue. Um, and many people took advantage of this. I suppose I was one of them. I did all the stuff in the end. I did it all by the deadline, but
that's it. I think this is what
yeah,
matters.
that's all that matters. Yeah, that's all that matters, right? Like, you're not getting your degree at the end because of attendance. You're getting it from the work you're putting in. But yeah, I suppose as well because I was studying business, it was kind of an area that I felt quite comfortable and familiar in. I did business at A levels. I'm from the UK, so we had A levels before university. So I did business then. I ran like an e-commerce store from when I was young, so I was always sort of involved in that side of things. So it felt like a familiar area, and I felt like I could get away with putting less time into it. But again, that was remote as well, so I could, do a bit of work, get on the charts without worrying about a teacher behind my back looking at what I'm doing on the screen. So I'd say if you're actually like physically in school and you're in lessons and in classes, trading is probably one of those things where it's very hard to do, especially if you're entering trades and you can't manage positions. That's going to be really tough. So yeah, if you're probably trading during school, I mean, there's probably better people to take advice from than me, but my advice would just be just focus on the education side of trading rather than actual trading, and then try and do that at another time.
Yeah, when you actually have time to focus on. I have a
Yeah,
friend, and this is actually, I think the approach is amazing. I have a friend who's now is starting to become a policeman, and they have like a very tough here in Spain the physical exam and the theoretical exam. So he used to trade before, and he said, I'm not gonna trade now until I get the position in the police and I know my schedule, so I know which hours of the day I'm free to focus on
right.
the art, and then I'm gonna adapt my strategy to those times. Because he said there is no point of me trading right now, because in half a year everything is gonna change or like less, depending how fast he's gonna get approved, So
Yeah,
he will need to change it all again from zero. So I think it's crucial, and we rush certain things sometimes so much because we feel like right now is the moment, now or never. This next couple of months are gonna become, they're gonna make me a millionaire. But realistically, trading is a long-term thing. And the funny story, like funny fact about it, I found out for myself that the less you focus on results, the better results you get.
yeah, I had that as well. It's it's funny, really. Like there's a time where you just like fixate so much on the P&L. You fixate on that so much, and all of a sudden you worry less about it and you focus on the other areas of trading, and the P&L goes up. I think that's the case for like most people that have been doing it for a while as well. So it's definitely one of those things that works. Like, don't focus on the money, focus on the strategy, focus on the discipline, all of this, and eventually things will click. But that's a really good example of like making trading work for you, kind of like having trading be flexible to you, not you sort of be flexible to trading. So, and I think the hard thing as well now for a lot of like beginners and new traders is, from what I see anyway online, is it's a lot of 1 minute chart scalping and all of this, which is great if it works, but I think it's sort of influencing people into stick to that and, you know, stick to the lower time frames and all this and trade every day. And that goes to show you don't need to. You know, there's so many strategies out there. You can work full time in a job, in an in-person job, and you just figure out the times that work for you. So, you know, exactly. You can adapt it to your situation and just do what works for you.
Yeah, absolutely. I agree with you. And by the way, guys, yes, we do have a giveaway today for every single one of you. The link is in the chat. So if you go to our chat and you click the link, you can enter the giveaway and you can win prizes. You can get free accounts. So make sure that you go there, apply right now. The link is in the chat right now, in the description as well of our live stream. So make sure that you don't miss it out. And okay, you guys are talking about gold. Of course you are. I mean, of course. Sure thing. Okay, let's have a look at what a gold is doing, shall we? Because in the end of the day, we are here for trading as well. So I'm going to quickly go over what I think, Ellis, and then I would really love to hear what you think about gold currently from the way that you're in the market. Now, you guys are saying buy in the chat. I see JK saying buy. Okay, so Don is saying consolidate, and I saw someone else talking about gold earlier, I think also for buy. Now, actually, I'm looking for the opposite direction. I'm currently looking for a sell on gold, at least for today, for the first half of the day. Now, let's have a look at this. Now, this is GC futures, so it's a futures on gold. If you look at gold in the bigger time frame, right, we're gonna see that we've been in this range for a very long time. Now, I was bullish since these levels here. We were talking about this last week because the order flow was showing the inflow of a big amount of sell orders. Now, the price was the opposite. The price was going up nonetheless, or consolidating since April, depending the period of time that we take. Throughout the past days, thanks to Trump, and the free fear of Powell resigning during his yesterday's speech, gold climbed almost to the previous all-time highs. However, right now, as we can see, that what I'm looking at personally today is that gold has reached this zone here, which is not only the previous highs, but also the accumulation zone. So we see when the price reaches this zone, we've been not only rejecting, but actually accumulating some volume before continuing to go down. So I trade based on volume, Alice. So I use basically the volume profile, the TPOs, their footprints, and order flow,
right?
Like order flow scenarios to build my bias about the market. So what I'm looking at here is that gold has reached this zone here, which is the point of control of the consolidation, the value area high and the value area low. So this gray zone is literally in between those three major levels that I'm looking at. And the price has reached it and started rejecting, as we can see already, over the night. So this would be my perfect entry if it wouldn't be the night, because that was a point of control of this range. However, it's just not my time for trading. It was like 1 a.m. on my side, so I was trying to sleep like a normal human being. So as we can see here, the price had accumulated more volume yesterday when reaching those levels. This is a point of control of the current week, and we are already Wednesday, so that actually is matters right now for me. Also, this range is something that is currently holding the price. We had 2 rejections. I'm looking for the third rejection, and I'm still looking for the small sell-off today before continuing back to the upside. So I'm still swing bullish on gold. However, I do think we're going to get a smaller correction, especially because we are rejecting this point of control of the week already. And if we see the distribution of the volume over this move to the upside, so I essentially take the first candle of the move till the last candle of the move, we are going to notice several levels. One of them is the level 34.27.5, which is going to be my first target if gold still starts dropping. And the next level is going to be, well, the zone is actually here, 34.11 and 34.09, which is the developing point of control of the week. For me, point of control of the small range, the previous highs. So I am looking for something like this with gold right now, and then for the continuation to the upside. That is currently my opinion on that. And I think we can definitely see 34.60. I'm not sure about all-time highs. Um, regarding the Powell, the situation yesterday was quite interesting because there was some fake news already shared online that Powell signed the resignation paper and so on, and then it was deleted. I don't think we're going to have the resignation letter from Powell at least until the next week interest rate decision. So when they have the interest rate decision, then eventually, at least afterwards, after the monetary policy, we're most likely going to have some more tension regarding the Powell staying or leaving. Now, currently, I think gold is going to slightly decline down as we are kind of entering, the moment when people are most likely going to, feel a little bit calmer, at least for a moment being, regarding the whole discussion between Powell and Trump. But of course, let's see. At least this is what I'm looking for today. Ellis, what is your opinion on gold currently?
Yeah, so if I just see if I
Yeah,
can share my chart.
here we go.
See if it comes up. Can you see my screen at all?
Yeah, it's perfect.
Yeah, perfect. Yeah, so probably going to be a little different to you really here. My strategy is, very, very sort of stripped back. So at the minute, there's nothing for me to see. If I was to look for a position on gold, the one thing I'd be doing right now is going to the 4 hour, which I always do, finding the sort of most recent area of structure. So for me, we've got this low here on the 4 hour, high here, this high here broken with imbalance. So this for me is a clear swing. What I can see now is at the minute on the 4 hour, we're actually rejecting the 38.2 level, which for me is sort of a key retracement level where we can see impulse sort of moves in the original direction. So from this level here, if I now go down to here, if I mark out here, so what I'd be looking for now is a chock on the 15-minute just to take us higher. Now, I don't trade gold, but there could actually be a setup here that if on another pair, I would probably look to take. So what we've had here is a movement down, nice body closure as well below this low here to sort of entice people to come lower. Price is now reversed, we've come up, failed to break this level initially, retraced back slightly, and now price looks to be coming up, and we'll see whether or not it breaks this level here. What I'd want to see in this scenario now is a 15-minute imbalance and a retracement. Now, for me, this would be the first target if I was to look at buys. But whether or not I'd get a retracement before price hits this level is another story. And that is mainly why I don't take many trades a month. There's often a lot of scenarios like this where price will just run. It happens, but so yeah, if I go to the 1 hour as well, see if we've got our points of interest. Got a 1 hour area of interest here, just a fair value gap that price has come to fill. So price has come to this fair value gap, we filled it, we've rejected really nicely on 1 hour, 2 hour and 4 hour, that 38.2% level. And yeah, if we get a break here, buys is something I would look at. If I look here as well, this would be this would be sort of our Asia high as well, and a key area of liquidity to take out. We've got this high here, which price failed to close above. We actually wicked it. So for me, there's probably going to be more intention to go to the upside and just clear this liquidity. When I look at chocks, I always want to make sure, in most cases, that we get a clean sweep like this with a body closure. So if I was going to be looking at this chock here, this low here that got broken with imbalance, if I was going to be looking at this as a sell opportunity, I would ideally want to see this sweep here with a body. That would just, for me, that's just a stronger sign that price is going to go further to the downside. So yeah, for me in this instance now, if we break, buys would be the more likely option. And then in terms of an entry with my style, again, I like to use the fib quite a bit on high time frame structure and also for my entries. I'd look to enter on the 61 level. So like with most trades I mark up, I'm probably asking for a bit in terms of a retracement, but that is what keeps me profitable at the end of the day, so I'll stick to it. So yeah, I'd want to see something like this. So yeah, if we do get this break here, I want to see a retracement to around these levels here, for then price to come out and take the high. For me, all the higher time frame confidences are there. We've got a fib rejection, we've got a higher time frame points of interest, nice clean liquidity sweep, and hopefully a break of structure, change of character, sorry, to the upside. So yeah, as what people may be wondering as well, why I'm mentioning all of these phrases, perhaps familiar with ICT and all of this. It's believe you me, it's not something that I follow religiously. It's not something that sort of look at for education. These are all terms that I sort of knew before I was even aware of all of that. So and it's something that I found that has worked for me. So yeah, if I was to look at anything on gold, it would probably be this, but with the movement we're getting now, it looks as though we may go on and take this high. So yeah, that's my outlook at the minute. As to where I could see price going in terms of a higher time frame perspective, yeah, we could see this high over here taken out. Again, we've got these wicks on the high time frame that weren't properly swept. We do have this sort of supply area here, sort of order block area, which price has reacted to. But if we now see this movement towards the upside where we take out this high as well, there is a good chance, I think, that price could come and take this level too. So we'll see what happens, but that is my sort of outlook on gold at the minute, if I was to look at anything.
Yeah, no, I totally see the buys that you marked up earlier, but do you think the price is still going to come back there? Or is it like that you would take it if you would see it at that moment when the price was there already?
So do you mean in this scenario now?
Yeah.
So do you mean as in like, would I enter right now, or?
Yeah, would you wait for the price to come back there again where your entry was previously? Or is it like you would take it if you would see it at that moment and you would trade gold? Because I know you don't trade gold, right?
Yeah, no, it's yeah, I'd always wait for the retracement. I'm always majority of the time I'm setting limits unless it's in and around news. So yeah, I wouldn't sort of look to rush into anything now. As I say, there's so many times where this plays out, it goes in my direction and I don't get the entry, and that's part and parcel of my trading strategy. I get a lot of setups, but I don't get a lot of entries, which is fine. It all works in the end for me, but yeah, that's sort of my style really. So yeah, just sit on my hands, wait for price to retrace. If it doesn't retrace and it takes out the high, then I will cancel my limits and that will be the trade done in my eyes. I wouldn't at this point look to trade off this change of character here if we take out this high, because it would then, in my eyes, wouldn't be a change of character to enter off, because we'd be looking at potentially a break of structure, then trade this whole range again. So in other words, we'd form a new structure. So if I'm to look at entering off this change of character here, I need to get my entry before this level is hit. And let's say, for example, I always go for 1 to 2 minimum. So let's say, for example, that price runs really, really close to this level and comes here. And if I chart up here, yeah, let's say that this gave me a 1 to 1.7. I'd then look to extend my target and try and go for a bit more. So yeah, 1 to 2 is always my minimum, really.
Yeah, I see. Thank you. Thank you, Ellis, for your insight, guys. I actually Harshiha, I was sharing my view on gold earlier, but let me just quickly share it. And I also want to cover GU. I know you said you trade GU, right, Ellis?
Yeah. I'm a big fan of GE.
Nice, me too. So let's after gold in a second. Now, my view on gold is that I'm still expecting the rejection from this level now, but let's see, right? Because if it breaks through, I'm gonna actually be with Ellis, and if it goes back higher and it breaks the level and we don't get the rejection, then I'm gonna be looking for buys. So for now, I'm still waiting for the rejection for confirmation and then looking for those two targets. But once again, if we don't, and if we close above 34.44 again, 34.45, I'm gonna be looking for the move to the upside until 34.60, which is going to be approximately 150 ticks, 120 ticks on the future side. Okay, so clear we sign. Yeah, but gold can be interesting with those patterns. Gold can be quite an asset. Now, for the pound future, what I'm looking for is if we go to the high time frame on the pound, we will see that we did have the monthly point of control. This is the month of June 2025, so it's the previous point of control. And what is interesting is that the price did get the several rejections from the same level already in July. So we did on the 9th of July, we get the rejection to the upside. On the 10th of July, we get the rejection to the upside. The price finally was able to break through the zone. So later on the 11th, so we did have several tries again to go higher from the same level. This is the first time that the price has reached the zone from the opposite direction. So 34.53 is one of my sell areas for GBP USD. Now, that being said, my preferable sell area that I'm waiting for is right here. This is a high volume node. This is approximately 35.90 to 36.00, I would say. So this zone I would be looking for the price to reach, and then I'm going to be looking for sells from here. But currently for GU, I'm looking for the more short term, right, intraday trades. So what I'm looking for is I'm looking for the price to go back to the area of this consolidation here. So my view on GU right now is that we are going to essentially go back to this consolidation. And then from this consolidation, if it does, then I'm gonna already start looking for the potential move towards my original sell area. That is one of the main trades that I'm looking for this week as well for GBP USD. I've been buying the GBP USD yesterday together with EUR and the day before as well. So my whole week so far was euro and pound. Now this is the third day of the week, so let's see how this one is gonna play out. But currently I am slightly bearish for the next few hours until we reach the accumulation zone and the high volume node from this zone. So that's approximately this future. So that's 35.32. And then maybe the rejection from there. On the other hand, if we do break through this as well, I will keep re-entering the sell again towards the next area. So the way I trade is that I build scenarios for different situations that can happen in the market. I have my original bias, preferred bias that I see is the main for me. However, if the price does something out of my original preferable way, then I'm still going to be prepared to essentially take a trade from it and try to capitalize on that. So that's the way I trade as well. So that's my GU. What's your opinion on your favorite asset?
Yeah, let's have a look.
Let me start. There we go.
Can you see it all okay?
Yeah, perfectly.
Perfect. So, yeah, GU, what I'm looking at here again, 4 hour plus for sort of mapping out my structure. What I could immediately see here, we sort of had a QML, change of character, whatever you want to call it. Price retested partially, and then we had another sort of breaker structure to the downside here. So we're sort of within, in my eyes, we're within this swing now, and we have come into discount. So there is a possibility that high time frame wise we can continue bearish, but also at the same time, I'm not looking to sell right now. So if it invalidates this swing and goes to the upside, absolutely fine for me. I'm not going to be in the setup just yet. So I am looking at sells, but I'm also looking at buys. So if I now go down to the 15 minute, if I was to get into sells, again, I'd want to see that similar pattern to what I saw on gold, but just in the opposite direction. So what I'd want to see here right now is we've got these wicks here. I'd want to see price come up, grab those, close above them, and then come back down and close with imbalance, get in on the retracement, and then look to target the discount of the opposing range, which for me on the 4 hour, this low, this high, this would be my opposing swing. At the same time, price could now come and retest this swing, and I could be looking for buys off the 38.2 here. Again, looking for price to retest before I get my entry, or price would come a bit lower into that discount area, come towards the 50% level, and again I could see buys as well. So I'm not looking for these swings to hold. I'm not looking, I'm not looking to be right with my higher time frame structure. I'm just using it as a bit of guidance as to where I want to see the 15 minute go. And then in terms of targets, so if I was to look at buys from this level here, for example, I wouldn't necessarily be looking to take price all the way to here. I'd just be looking to take it maybe to the middle of the range, maybe to a key level of sort of sessional liquidity or something like that. Just as a little bounce, take my profit, and then whatever happens after that is fine. So see what the market gives me, and hopefully we get another trade before the month is over. It's been a painful couple of weeks. My first few trades of the month were the first week of the month, so it's been a little while. So hopefully I get something. But yeah, this is sort of outlook on GU. Again, similar to you, kind of adaptable to whatever really happens. I haven't got a set in stone bias. I'm aware of what the higher time frame structure is saying. I'm aware I can look for sells here. I'm also aware I can look for buys here. So I'll just see what's given to me. Not looking to rush into anything now. As of now, there's no setup for me on my time frames. But if I was to guess, I'd imagine price actually comes down and takes out this liquidity, reacts to this level here, and perhaps continues to the upside. That's just based on what I've seen with my eyes on GU lately. So it'll be interesting to see what happens. And again, similar scenario to what we had on gold. You've got these wicks here. You've got these lows here that were taken out, but they weren't sort of closed beyond. So in my eyes, this is just wicks, this is liquidity that price needs to come and collect. And we've got a key level here, probably a point of interest as well. Yeah, we've got some more inefficiency here to fill, inefficiency here as well. So there's lots of reasons for price to come and gravitate towards these levels. So we'll just see what happens, and hopefully I can get in.
Yeah, I can see this. I kind of agree actually with your point of view on GU right now as well. I am looking for the sell. In fact, I did enter even sell from the moment that I said about sell. So it is running, but I can see what you are saying as well about the GU. And I can definitely, for the buys, for example, I am on the same page with you completely. So that's going to be interesting. Now, yes, gold is right now rejecting the weekly point of control. So let's see if it can hold the third time, because in fact the price did not reach it earlier. We did have some space until then. The price was trying to break it. If we can close this 3 minutes, in 3 minutes from now, 15-minute candle can close below this level. I'm still looking for shorts. and still looking for confirmation. I have an other chart of the futures at the moment opened. And if I get some confirmations with maybe volume coming in, I'm gonna potentially look for some short-term sells for gold.
Nice.
But
That'd
yeah,
be interesting.
yeah,
I've got because looks as though we're breaking as well. So from my perspective, if I was to look at anything now, it would be buys. So two different sides of the coin. It would be
yeah,
interesting to see what happens.
yeah. Very interesting. Very interesting. Yeah, for me, when I trade, I basically don't look at the market structure, so I don't look at the break of highs or lows.
Right.
Breakthroughs and retests. I'm actually looking for the volume be tested. So as long as the price is below the volume, I'm looking for shorts. When the price goes above the volume, I'm gonna start looking for longs. So if we can get above this, I'm gonna start looking for longs. But as long as we keep it below this level, still my bias keeps the same basically. But again, I can be completely wrong with this one, right? It's a part of the
Of
game.
course.
It's a part of the
And
game.
again, it's one of those, isn't it, where as long as it fits your strategy, if it's a loss, it doesn't mean you're wrong. It just means the strategy didn't play out that time.
Of course.
You're never gonna win every trade, are you?
Yeah, it's just a part of the statistics as well, right? Statistically, every strategy will have some losses, while another
Of
one has
course.
some wins, and the other way around. So, Okay, so, Mariana, welcome to the stream. I saw you in the beginning, I think. Opinion on US 30. Let's have a look at that. Let's have a look at the US 30. So US 30 is one of the three assets that did not, in fact, renew the all-time highs compared to NASDAQ and S&P 500. So we are trying to reach the all-time highs, which we didn't yet before. So the levels that I'm looking at, the key levels, is essentially starting from 44,960. We see that there is a volume, there is a touch of the volume, there is a test. I am currently, obviously bullish because what else can you see here? Like I wouldn't be looking for shorts at the current moment because the price is strongly pushing up. We definitely have the bullish momentum, so I'm not shorting against the current momentum in the market. So in gold, for example, the reason I'm looking for short is because we did have the stock first, then the price starts going down. So that's different when if I'm trying to short, it would be the equivalent of trying to catch the falling knife, but in reverse direction. So I'm not looking for that. Now, on the other hand, if we tap into this area, if we get confirmation for a sell, I might start looking for some sells for Dow Jones. About the 44,990 level and about this gray zone in general around here. And my target for this, if the price would give us a confirmation in the first place, right? Because it might not give it, but if it does, if I get any confirmation here, any kind of, it can be the consolidation, it can be the volume moving, it can be the double top, anything from the price action side that I'm using, or the order flow as well. One of the main zones I'm looking for the price to return to is this area here, which is the previous accumulation. We had a test accumulation. The price finally was able to break through, so we returned here. I'm going to be looking forward for eventual test of the zone. And then lower as well. The other things, another area that I'm looking for is if the things go really south with America, then that's 44,640, 44,550 area. Okay, so this is basically the other zone. But for this to be reached, I'm going to be looking for the price to break through here first, preferably renew the lows, then give a test, and then only come lower. I'm very careful with the volatile indices, like for example NASDAQ or Dow Jones. So I need an extra confirmation that it's breaking the zone, because it's usually leaving long weeks, especially on the market opening, especially on the news releases. It can they can leave a long week, rob the liquidity, continue to go in a certain direction it was going before. So until we break the lows, I am not looking for this zone to be reached. The main area I'm currently looking at is 44,960, 44,040 for the confirmation for a sell. The target's at 44,830, 44,812, and then if we break through, then the zone below it, that's U30. Ellis, I don't want to hold you back. I know you probably need to run, but it's a really big pleasure to have you on the stream. It's amazing to have you with us. Thank you so much for sharing your story, your insights. It's extremely valuable. And not gonna lie, I'm really looking forward to see your streams in the future, learning more from you as well, and really hoping to host some lives in the future together again.
Yes, thanks so much for having me. It's been really enjoyable. It's flown by really quickly actually, but yeah, hopefully I'll come on more regularly and maybe get a longer slot next time as well. That'd be nice. But yeah, enjoy the rest of your day, guys. Hope it all goes well, and best of luck. See you all later.
Alice, thank you so much. It was amazing. It really did flew by like 10 minutes, the whole hour. So thanks for being here. And guys, if you got value from Alice, please let us know in the chat as well. We are looking forward to see him more often here. Thank you so much. Enjoy the rest of your day.
Nice one. See you later, guys. Bye-bye.
See you. Okay, guys. So it's me and you right now. So how are you all doing? How are you all doing? Let's see. Nelson, what do you think of the trading market opening? Depends which market opening you're talking about. Are you talking about the New York market opening? If you're talking about New York, which is at 9:30 a.m. Eastern Standard Time, that I do not trade the market opening on New York. So I trade about half an hour to an hour after the New York opening because of the volatility. Okay, so I do not like the moves on the market opening. I don't really appreciate the volatility and the potential of being kicked out on the stop loss. There was a time in the past when I was trading the New York opening and it was going quite well. Now that being said, it was with a different market circumstances, right? So it was a different situation in the market. So I don't trade it. Now on the other hand, I do trade London session, for example. So don't have the problem with a London opening, don't have the problem with the commodity market opening 9 a.m. Eastern Standard Time, for example, for gold and oil. So the only things that I actually really do not appreciate in the market opening for their stock indexes. So that's it. But again, there are systems I believe that you can trade those. With my approach, since I trade volumes and there is a huge amount of volume coming in the market on the market opening, it's not really something that is perfectly fitting my trading system. So Nelson, that's my honest answer. Again, it can be for someone else, different. Anna, for NASDAQ, my opinion is going to be quite similar for Dow Jones. For NASDAQ and S&P 500, I was yesterday looking for sells, in fact, so that was actually quite good. Now for a NASDAQ and S&P, I have the double opinion in that we did renew the highs. We are right now forming something that looks like a head and shoulders pattern. So we did have a test of this zone here, as we can see. We did have the two tests. We did have a break and a test from the other side. We are coming closer here. On the other hand, based on volume, it's a bullish situation for me currently. So I am currently not trading S&P 500 and NASDAQ until the New York opening and something clears up, because I have two opposite opinions on that. One is for short, one is for long. Now the short one is that we can test this area. Let me just quickly check how the volume was distributed. Let's specify it. Test this area here, which is also the point of control of this whole move to the downside. Swing move yesterday here. So we can test this area and we can eventually see the drop. On the other hand, we do have the big volume area here. So apologies. Here. So that would be one of the zones I'm going to be looking for the price rejection. And the other one is below here, the previous lows and the wicks. So all of this. So from here, I'm going to be looking for the continuation to the upside for NASDAQ this way. But again, I am first and foremost waiting for the market opening. because I honestly don't think we're gonna get anywhere until the market opening. I'm expecting the continuation of consolidation more than anything else. Until the New York, we do have the home sales coming later today, and housing market is one of the first indication of also in inflation. We did have you know, the storm yesterday with Powell's speech and expectations on the Powell's leave. So right now I'm expecting the market to be slightly calmer, but perhaps the market opening can push it a little bit and give it some extra volatility. For existing home sales, we are not expected to really have the big difference. So we're gonna have around the same numbers as if it's gonna come out as forecasted compared to previous numbers. So it's 4 million compared to 4.03 million. Not a big change, to be quite honest with you. So I'm not expecting the big volatility in terms of actually home sales coming out. So tomorrow we're gonna have the PMIs, and that's something I'm really looking for. PMIs flash, and that's going to be something very interesting together with the interest rate decision in Europe to see if we're going to continue the period of the rate cuts or we're going to have a pause concerning the new tariffs that were imposed in Europe as well. So that's interesting. But as we are talking about NASDAQ already, let's maybe cover S&P too, shall we? Now, this is a trade that I was looking for trade taken and I didn't take it. And the reason for being is the timing. So that's an example how the timing for your entry can save yourself from the bad entry in the market. Because in 7 p.m. on 8 p.m. my time is not the time when I usually enter the trade. I saw it yesterday, I was looking at it, I'm like, it looks good by my strategy technically, but the timing is not one that I usually enter the trades on. And this is crucial because I backtested the timing. I know what are the most profitable times for me. And the fact that in fact, I even entered and I exited immediately the trade on the break even. I was like, you know what? I'm not going to do that. And the time, it saved me because as we can see, the price otherwise would hit the stop loss. So not the trade that I took, the trade that I was looking for, yes. However, it did save me from the timing did save me from the bad trading decision as well. For S&P, we are on the all-time highs. To be honest with you, I'm going to be waiting for the market opening to see the situation because I'm not really, I don't really have a big opinion on that right now. Let's see, because I'm expecting something to change in the market opening too. Let me check futures first. Trying to break through the highs and the volumes on top. Don't really see big momentum right now. Let me share with you their setup that I'm looking for to take if by any chance it comes into play. Now, if by any chance today or tomorrow on the PMIs, the price comes back to 6308. 6308, 6303 in fact. I'm going to be looking for the price to go up from here. So this is the zone I'm looking for buys for S&P. This is one of the main scenarios also for this week if by any chance we get here. Now, it doesn't mean that I'm going to be selling towards the zone. It means that I'm going to be waiting for if the price reaches the zone, I'm going to be looking for a sell. Okay, that's not that it's for sure going to do that, but it's if it does, then I'm going to be looking for not for sells but for buys. Okay, for buys from the zone. But from all of those, from all the indices, S&P, NASDAQ, and Dow Jones, I do like NASDAQ the most, not gonna lie. I do like NASDAQ the most for current trading session. Ahmed, we did have the gold analysis, so if you go a little bit earlier in the stream, you will see it. I'm currently looking for the rejection to the downside. Price is struggling slightly to reject, but we did reach the point of control of the week and developing point of control of the week, and the price is now trying to reverse. So I'm still expecting this to happen until the candle on 15 or 30 minute closes above 34.44, I am currently bearish on gold. If we close above 34.44, 15-minute or 30-minute candle, then I'm going to start looking for buys for gold. So right now, gold is at the decision-making point for me. Either I'm going to be selling it or I'm going to be looking for a buy when I see some reaction for the price currently. Yeah, that's my opinion. Gold. Alda, congratulations. Welcome. Another funded trader. Welcome to the crew. So good. Really, congratulations for you, for your hard work, for your achievement. One step closer to your goals. Amazing. Yeah, so if you're testing the strategy on the market opening, it's like if you test it and you have something that works, amazing. There are systems that work. In the past, I did have the system that was performing very well. Then the market changed, switched, and it stopped giving me the performance that I want. So I stopped trading on the market opening, which doesn't mean that it's a bad thing to do. So if you have something that works well, then why not? You guys are talking about USD cut in the chat. Any trading book recommendations? Yes, absolutely. Love those books. Now, the first book is called "What I've Lost, Losing What I've Learned, Losing $1,000,000." Oh, what I learned losing $1,000,000. Let me just try to share my screen with that. With that book. Okay, here we go. Okay, so this is the book, one of the best books really that I think is, made a huge impact on my trading career. If you haven't read it yet, it's an amazing book on how we fall into the traps of our own psychology, and it's gonna be applicable to so many of you. So really, from the bottom of my heart, read this book. Thank me later. Come back to the stream when you read it. Let me know if that's something that has really was a big impact for you. So I really love this book. It's one of my favorites. And I never recommend books on the technical trading, technical strategies. The reason for this has been, first of all, I know people who write this kind of books, and 50% of them at least are not even traders. They are writers, they are editors, they're not traders. For example, if you find a book which has 150 patterns explaining the triangle pattern in the book, right? It's written just for the content, just to sell you something. It's not written to give you any understanding of the market, because the triangle in the market is a triangle. It can be a triangle, it can be a flag, it can be a range. Essentially, it comes down to all the same. The market is going flat. It doesn't really matter in which direction it's going, in which shape it's going. It's creating a triangle, a descending triangle, ascending triangle, the equal triangle, or just the rectangle shaped consolidation. It doesn't really make difference. So lots of these books are first written by writers and not traders, not practical traders. Secondly, lots of those books are written 15, 20 years ago. And the way it was working before, and the way it was working on the stock market, which was the core for many of those books, because the Forex and futures were not really popular at that moment, were not available for people, for the outside audience. So those books were written for a different market. Those books were written for a different time. So most of the things that are discussed in those technical books are not applicable anymore, or applicable in a completely different way than it's been taught in the book. So I never recommend the books on trading in terms of technicals. But another one on the psychology is called The One Good Trade. Amazing book. If you read those two, they are most likely going to change your perspective on trading. Really, truly, again, read those. Thank Me Later is the book by Mike Bellafiore. So really, please go for it. Read the book. Now, and the third one I also want to recommend is called The Best Loser Wins. So those three books are my favorite, really, by Tom Hugart. Tom is an amazing trader. He's been for a very long time also leading open articles and everything that helped him to become a better trader as well and achieve the full-time trading. He's one of the biggest retail traders in the world, home traders. So I really, really highly recommend you to read that. So Best Loser Wins, What I Learned Losing $1 Million, and One Good Trade, my absolutely all-time favorites. So let's go back to the charts, shall we? There we go. Okay, see, let's have a look at the comments. There are a lot of comments and there is only one me. Yes, Best Loser Wins as well. Exactly. Yeah, most of them sell books and no, they don't sell you something that works, really in the market. So. Good question. I understand your point, and the reason I'm asking the reason you're asking this question, my answer is yes, and I'm gonna explain you why. Because even if I give you exactly the same rules I treat by, chances are you're not gonna have the same results as me, unfortunately, or as any other trader. You're gonna have your own results, and you're gonna have your own twist on the same strategy. So because the market, your way of perceiving the market is going to be still different. Your way of making the decisions, even if it's the same trading system, still going to differ from what how I see the market and how I make my decisions. So yes, why not? Because in the end of the day, results are going to be different anyway. Because if it was as simple, like Ellis was saying before, that he learned the strategy from one trader, but he still added some twists and tricks from his own expertise, his own experience. And it was the same for me. If I was able to go to the trader and just learn the complete trading system without adapting anything, it would be great, but it wasn't like this. I've learned the system, I've learned tools, I've learned the base. I needed to go out there, test it, and twist it to something that works for me. So for me, the answer is yes. I know Jonatan, for example, if he would be here, he would say no, probably. Jonatan, I know that you were listening most likely in the back to our live stream, but I'd say yes. I know that probably you would say no. Wait, you are always welcome to, of course. Always welcome to. And exactly, guys, smash that like button. Smash that like button because this is what makes a huge difference. Because there we go. Smash the like button if you're enjoying the stream because it's a small act for you. It's a huge difference for us because the algorithm of YouTube starts recommending this live to other traders who can find us and who can also learn, get value from our live stream. So if you like the stream, if you're getting even a single small piece of value, please do recommend it to others and please make sure that you hit the like. Gold is struggling to reject for now, so I'm waiting to see what's going to happen here. As we can see, it's trying to rejecting and it's still hovering around the volume. So let's see what's going to happen next. But you guys are talking about AUD, USD, and USD CAD, so let's open the chart. Oh, thank you so much. Thank you for the lovely comment. I really appreciate that. Thank you. I've discussed gold so many times on today's stream, really. If you just if you just go a little bit back and you listen to it, it's at least 4 times that I discussed gold today. Let's have a look at something different, shall we? Let's have a look at AUD USD. Actually, in fact, let me bring up the chart for futures. Okay. AUD USD is reaching the previous highs. I wouldn't touch it for now because we are on the previous highs here, but we broke the volume at the previous level. So the volume was, a majority of it was at 65,810. The high side 65,985. Every time we reach the zone in the past months, as we can see, the price has been consolidating, and I would expect the same situation to happen now. So why would it change, right? So right now is in this indecision zone for me personally, and AUD USD I wouldn't be touching currently, to be honest with you. Not something that is talking to me. We've been rejections from this volume essentially. So not something I actually really like. Let's have a look at 6S CAD USD. Very similar as well. My main zone I would like to see the price reaching is here. This is basically the zone for USD CAD. Well, the reverse chart, so inverted one. Oh, let's see. It's very bullish, but we are reaching the zone of the rejection now. So I'm honestly waiting for the rejection from this area. I would be waiting for the rejection from this gray area for the USD cut. Yes, right? Because we looked at the AUD USD, now USD cut. So I would be looking for the rejection currently. Now, if I get any sign of rejection, that would be great. I'm not sure we are going, but this is basically the zone that I'm going to be carefully watching. One moment. Here we go. So carefully watching for the rejection. If I get the rejection in the zone, I'm going to be trying to sell CAD USD, so buy USD CAD. So this is a USD CAD futures. Okay, so back here or back here, one of the two zones. And now if we look at the USD CAD, it's going to be the reverse chart. So let me just clarify this for you so it's not so confusing. It's not what I wanted to do. This is what I want to do. So we are getting closer to this lows, to this volume here. Again, if we get the confirmation, that was a beautiful sell earlier today. How did I even miss that? Well, somehow I did apparently. So I'm going to be looking for the price to return back here. Now the question is, one of the basically ideas is to continue sell because it's quite a big volume, realistically. So I'd say from 3600 we can look for some confirmations for a sell, and this zone, if we get any rejection confirmation, can be a nice bullish zone here as well. Okay, so let's see some other things as well in the market. Yeah, we checked gold. We checked gold so many times. GI, do you find July and August very slow months? Let's say yes, mostly. July has not been bad for me, not gonna lie. July has been good. So August usually is a slower month for me personally, but July is still okay. Now this year we have different variables in the market as well. So this is the first year of Trump presidency. We have tariffs. We have a very high tension on the Powell as well and the rate cuts potential, or the rate continuation of the rate, high interest rate. Apologies, I need more of this. This thing has 100 milligrams of caffeine, so it's like it's essentially the coffee. So apparently I need more of this today. Mm. So concerning all of this, I'm not really expecting August to be a really slow month. But let's see. July so far for me was good. Based on testing and the previous year's experience, July and August are the slowest for me out of the whole year, and September, half of the September as well, actually. So let's see. Which volume indicator are you using? Really, Michael, if you would see my other chart for the futures, I'm using lots of volume indicators. I'm using at least 1, 2, 3, 4, 5, 6, 7 different volume indicators. They all visualize different aspects of volume and highlight the different volume which otherwise I would be able to miss out on. Now, in the trading view, they do not have so many options. So the volume indicators I'm using on trading view is called the PVP. So if you go to indicators and you type in the search the PVP indicator, periodic volume profile, it's going to be right here. And the other one is going to be VRVP, so visible range volume profile. Those two indicators I'm using. That being said, visible range volume profile I use as the one, just like this. Now the PVP, I have 3 of those on my chart for the different periods of time. So for the daily, weekly, and monthly. Okay? So just give me guys 1 second. Okay, so this is something that I'm using on TradingView. On the other hand, also, I do use the manual volume placement, which is a fixed range volume profile. I get asked this question a lot, and guys, no, I don't use the anchored volume profile. I just use the fixed one, which allows me to basically just place it anywhere I wish, anywhere I see, I have a need of it to see the volume distribution. So the anchored one I didn't really find useful for myself, but the fixed one is being quite useful as well for me. The way I use the fixed range volume profile is I see the volume distribution for the specific period, like for example the recent swing drop for the last couple of days. So I'm gonna place it over this whole move from the top to the bottom and see which areas are the highest volume nodes, like for example this one right here, and those are going to be the areas from which I'm going to be buying or selling. So that's the way I'm using the fixed range volume profile. Yes, Umang, I'm completely NAI, 100,000%. It would be quite fun actually to have my avatar instead of me here. I need to think about that. Now, I was looking for the way to get 48 hours in a day instead of 24, because right now, for everything I'm doing, 24 seems to be absolutely not enough. So I need 48. Now, do you think if I create my avatar, I'm gonna get the 48 hours in a day instead of me doing everything on my own? I think that's gonna be quite cool. I need to work on that. And the DUSD. Let's see. Euro USD, would I buy? Absolutely not. Euro USD, I am not buying right now. And the reason for this is that. So we did break this volume here, this huge consolidation yesterday. So we've been trying to test and go higher from the zone, which kept failing. So right now, Euro USD is below this volume. and I'm expecting it to go back to this area here today. And from this area, I'm going to start looking for buys for Euro USD again. So I'm right now, in fact, in a sell for Euro until this zone, and then I want to see the price reaching back 17,750. So this is my scenario for Euro USD during today's trading session. So as we can see, if you get closer, the price is failing to go higher than this volume. I'm in a sell right now. What did he do? Where is he? Are you coming on? The audience has already seen you. We know you're here. Hi, Mike. Bye, Mike. Manish. Hey, how are you doing? Can't hear you.
That's a mistake, isn't it? I saw you on your own. I thought, all right, I've been battling with AI for long enough. Let me jump in and see what you're up to, and see if we come to an agreement this time on gold. Because I think I heard you say earlier that you were selling gold.
Yeah, I'm selling gold. You?
And I'm in the same. I'm not in the trade, but I'm of the same mindset. The only reason is because I am already done for the day. My trades. After my epic gold trade on Monday, all I need to do is 2 days of 0.5%, and that's my phase one done for my 5K.
Amazing.
So I've already caught a nice scalp on Euro Aussie dollar, which is looking good for longs at some point. It's come down a massive amount, so I caught a nice little scalp on that on the 1 minute. I'm not going to lie. So I'm done for the day with my trades. So I thought I'd just come and see what you were up to.
So you just wanted to come and say, I don't trade today anymore because I'm done.
Yeah.
So you do the work.
Yeah, basically. Yeah. So I can come in and give a whole bunch of signals and say, buy, sell, do this, do that, and I don't care because I'm not touching it. So yeah, it's going to be an interesting ABL segment.
Fairly honest, actually, I did quite a good in the beginning of the week as well. So I don't think I'm going to be trading Thursday and Friday. Let's see how the market is doing today. But Monday and Tuesday were quite good. And I figured out for myself that Friday is a horrible day for me to trade. So I'm not, my trading week already got shortened until Thursday.
Yeah.
So let's see, maybe Thursday I'm also going to skip this week. Let's have a look how it's going to work.
Because we haven't got any, well, at least according to Forex Factory, we haven't got any major impact news today. Yes, we've got existing home sales.
Home sales only.
But other than that, there's nothing else. I mean, that might move something, but I don't think, economic news-wise, it's relatively quiet this week, right?
Yeah.
So I'm not sure we're going to get too much. Obviously, tomorrow we've got the usual jobless claims and all that lovely stuff. So tomorrow is probably going to be the day where we might see some moves.
We have the PMIs as well.
Oh, we do, yes.
We have lots of PMIs tomorrow.
That's a very good point.
I can't seem to share your screen, this economic calendar, so...
1 second.
There we go, okay. Yeah, so we do have the PMIs, and we do have the interest rate decision for Europe, which is not going to be a big impact if we don't, if the trend doesn't change. So if they keep lowering the rates, I'm expecting it to be pretty much the same and not really shaking the market much. So let's see.
I mean, the consensus is they're going to keep the Eurozone flat. The Eurozone is probably the most predictable central bank that you're going to get anywhere in the world, right? So unlikely to see any surprises coming out. But yes, you're right. I forgot about the PMI. So PMI is going to be an interesting one tomorrow because it trickles out throughout the morning. So you might see some moves coming through on that tomorrow. But yeah, Monday was very, very technical. Tuesday there was a little bit of news because you had Powell speaking, but I mean, you saw the move on gold, but I don't think I didn't see anything major elsewhere. So we'll see. It's building up to a nice busy Thursday, and then, as you say, we can take Friday off and just chill. Well, you can chill and relax and go to the beach. The rest of us will grind away and
excuse me,
keep going at the coalface. You go to the beach and chill. You'll have made all your profits by then.
I have, for a fact, I was just talking about this with my friend yesterday. I have a pool, like literally 30 seconds away from my apartment. Right? It's a really nice, amazing. You know how many times I was there during the summer? It's been almost 2 months of summer.
I don't know.
3 times.
Well, I mean, whose fault is that?
I mean, the workload.
Yeah, well, we choose the work doesn't choose us, right?
I guess so.
So,
no one else to blame, I know. Yeah.
Thank you very much, Stephen. Yeah. The Aussie Euro one that I took was this one here. So, took a very nice little scalp, took it up to there, basically. So took that little buy scalp on there. We were in this little pocket that I was expecting us to see a reaction from. It was, I mean, it wasn't necessarily low risk. It was quite high risk one, but I still anticipated us to have some kind of reaction. We'd already had a couple of them here, and we were still in this area. And then when I saw this candle here, I was like, okay, all right, let's give it a go. So yeah, managed to close that. So I'm currently sitting on. I actually closed my MT5 to stop me from being trigger happy. But let's see. So I'm currently sitting at $682 profit. So I'm well above the $400 profit target. So I've given myself plenty of buffer. And so now it's just another $25 tomorrow and or whenever. And yeah, phase 1 done. And that's my first phase 1 done in 5 months. Because I've been such a degenerate for so long. So yeah, and that's all just down to that one gold trade. I am. No, I really am.
We all have this periods of time, and we completely do like.
Yeah, I'm definitely a degenerate. So, Void is asking LJ, quick question. Is LJ? Where's LJ? Is LJ in the chat? LJ must be in the chat. He's saying, quick question. What's your favorite character? I'm doing some MT5 templates for ABL. Okay. Sounds very mysterious, Akram. Very mysterious. No signals here, I'm afraid, Mickey. We don't give any signals here. So yeah. Van Alvan is asking for Aussie CAD. Obviously, Aussie just showing a lot of strength at the moment. Even on the 1 minute, it's just pushing higher. This big move has broken all of this. So, I mean, you'd be looking for some kind of reaction area on the 15 minute up here somewhere. Most realistic at the moment is, well, the obvious one is this one here. But it might not get that far. It could be even in here, in that one there. Don't know if it's already broken past that area. So you might see a little bit of a scalp when we come into this little pocket. Otherwise, yeah, there's. I would definitely say looking at sells on the 15 minute, on the 4 hour. Again, we're coming to retest this wick. So, and this is a very, very strong area, if you see here. So probably what I'd be looking for is actually this one here. This would be a nicer one to pick out. This one here in this pocket. Looking for sales maybe on Aussie CAD. But tell us what you're looking at. So yeah. NASDAQ was.
Did you see gold? Did you see gold now? apparently
Yeah.
we're right with you. Look at that.
Yep. It's come and it's taken this level here, and now shooting off. It's come into that 4-hour candle. Now the only thing is I don't like the way the 4-hour closed. It didn't close particularly with much rejection. So the 5-hour looks more promising. So if I can see confirmation on other time frames, the 7-hour, for example, then it looks good. Then I would say, yeah, anyone who's in gold sells right now looks like it's a nice catch. The only thing is where it's starting is with these inside bars on the 15-minute, and it's just coming down now to this tiny little pocket on the 15-minute. So be interesting to see what it does here. If it breaks past that, then fair game. But at the moment, it might have just stalled, and you can see it's wicking back up on the 1 minute. So just got to be careful on that 1 minute, because when it's that impulsive, it's normally catching people out one way or the other.
Yeah, I agree with you.
So if we look,
on one account I closed it, on another account I moved it to break even. So let's see how it's gonna go.
Let's see, because this one, yeah. See how it took this liquidity here, created an engulfing candle in the process, and then did another one here. So that would have been a nice entry here. If I'd seen it, I probably would have gone for something like that, maybe. I mean,
yeah,
it's probably a bit of a bigger stop loss than I would have wanted, but would have still been a nice trade. Take it down to that pocket there, a 3-4R. Would have been decent, but I was admittedly, because I wasn't looking at it, I can't say for sure what I was seeing, whether I would have seen it or not, but I was looking for sells in this wick.
I'm basically out of one because I don't really like how it rejects the volume now as well on my side. So if I go and I'm gonna show my screen for a second. So basically I was expecting it to reverse from this volume, but we are right now rejecting this area again, and we've been here for quite a while, and I've seen this gold behavior earlier, and there is a chance that it's just now gonna do this again and gonna kick me out. So I'm not really, I don't really want to wait until it does it. So on one account, which is lower risk, I closed it on break even completely. I was like, okay, whatever. And on the other account, I moved my stop loss to break even to see, if it can go any further. So if it does, I'm waiting for 34.27.5, 34.11.1. So I have quite a big two goals on this one, and from here I'm going to be looking for the continuation to the upside, reversal again, but not, right now if you look at the 3-minute count, for example, and the 1 minute, it is trying to reject. So it was falling and now it's slowing down. So I don't know, don't want to risk it too much, to be honest with you, after the previous 2 good days on me. But I am in a sell for GU and EU right now. For EU, I'm in a sell literally from this point, from 365. I discussed it with Ellis earlier as well, so I'm waiting for the price to return into this zone of consolidation. I'd say exactly 17,005 to 16,890. So like this even. And from here, I'm also going to be looking for the reversal, whether it's for GU, at least towards 35, 36, 35, 35. Let's see. But I'm in 2 sells for GU and EU right now, and gold is closed mainly. Just a small part is running still.
Yeah, gold is reacting from a nice little pocket on the 15-minute still. A nice big rejection to the upside, and left a nice trail on the 1 minute of liquidity to catch on the upside. So very, very quick scalp you might catch as a buy before it carries on lower, I think. We look at when you look at kind of the higher time frames, I think the next 1 hour essentially is really going to be key, because if you look at the 1 hour candle right now, I could easily see that rejecting and pushing back up in the final 45 minutes. If we look at the 45 minutes, then again, we've got half an hour left on that. So I'd say there's a good opportunity for buys right now on gold.
Yeah. What do you think about GU and EU though? What's your opinion on that?
We didn't actually look at GU this morning. We did have a look at EU. I mean, on the 15-minute.
Before you're gonna switch, I was looking for EU actually as a buy from 17,365 here. But earlier, throughout the Asian session as well, in the beginning of London, we've been rejecting it and failing to go higher. So the price has been rejecting the volume from this range formed yesterday before the market closure. So we see clearly the rejections 3 times from the same zone. And now what I like, and the reason I entered sell, is because if you zoom in slightly, you will see the different reaction than the last times when the price came back to 17,364. You see that the price was reacting and going up from here. Even here we had a V-shaped recovery. Now this time the price went up and rejected the daily point of control and didn't create the move back to the upside for the point of control of this range. If it would, I would actually be looking for a buy because I was very convinced that, okay, this area can hold. Now, currently, as we can see, we rejected it. We left the week at the daily point of control. And this 3 candles, so the bullish and then the bearish reversal, are the sign for me that we are going lower. Now, the only things that I don't like is that on my futures account, I can see that we had the volume here. If you look at the volume distribution, we have quite a big volume at this area here. So that's 17 to 20. It's not visible from the Forex side, but it's quite a lot of volume there, accumulation, and I am concerned that it can also do this. But I'm gonna have a look at it. But mainly I'm bearish. Now I'm really keen to hear your opinion on that.
So I'm looking at, let me pull up my chart. So if I'm 1 hour, I can see a nice reason for sells, or a few nice reasons for sells. First of all, you've got this nice candle here. It's taken all the highs, created this engulfing, basically taken out this entire cluster of orders and pushed on down. We've come in, we've retested the wick on that one, and we've pushed down again. We've retested the wick of that, push down, and again, we're pushing further. You might see some limited buying pressure just right now, because what happened was we had this little wick here come and just take this wickless candle down here. So you can see that there. But I don't think we have it. Yeah, we do have still a perfect equal low down here. So still liquidity further down. So I would still be expecting us to come down and sell off. So the way it's forming at the moment suggests that it's still good for sells. You've got this engulfing candle, you've got this engulfing candle, and the fact that it's leaving a triple equal low suggests that sells are good. The only thing I don't like the look of is even just on the 1 minute you have these wickless candles suggesting impulsive moves down. You've got an inside bar here as well. So these are all major liquidity, and if you look at the move down, it's quite significant in terms of the strength of it, and it's just leaving all these inside bars. And these inside bars, for me, as you know, I like my inside bars. They represent major liquidity. So I can see the sells. This is a nice structure to suggest that we're going for lower liquidity rather than coming for this first. I think sells are okay. I do think sells are okay. It just depends whether we can break this low here. As far as I'm concerned, that's a weak low. The way
looks like it does look like it. Looking at how the price was failing to hold it.
The only thing you've got is you've got things like this 30-minute candle right now started without a wick. So again, it was an impulsive move on the hour, I guess. So it's probably an hourly, yeah. So on the hourly as well, it's also wickless. So if we look on other time frames, yeah, so it hasn't opened any others. So it is just a 1 hour candle. For me, it looks sells. You've got a nice structure here. You've got wicked up, engulfing down, and that's on the 7 hour. You've got the same on the 5 hour. You've got this inside bar, took the high, pushed down, retested it, pushing down again. So I would say looking for sells maybe down to, what's this? 170. The 170 area is probably a nice area to sell from.
Yeah. Okay, nice. Thank you for the more confidence to my short ID that I'm currently in right now.
You're
Great.
welcome.
I feel even better now holding the trade.
Arnold's suggesting or saying that he believes that we're bearish. 1384 on GU, sorry, which would add confluence to your EU trade.
I'm in both GU and EU sells actually right now.
GU doesn't look as clean to me as EU. I've got to be honest. Yeah, GU doesn't look as convincing as a sell, if I'm being honest, but we'll see. This was a trade idea that I had previously on GU. It hasn't actually come to pass. You've got a lot of like, for example, this 1 hour candle pushing higher, and the way the current 1 hour candle is rejecting here is also would probably be a slight concern for me on GU. So yeah. Jonesy saying GU has been the stronger of the two. I've been scalping 10 pip long trades, but like yesterday, New York session will bring the volume. Exactly right, Jonesy. Exactly right. Let's see what else.
I'm selling GU because of the rejection I had from one of the most important areas that I'm currently seeing. Mm-hmm. And I was looking for the breakthrough through this area and continuation. Now, if we look at the higher time frame, we will notice that this has been the point of control of the previous month. So this is a monthly point of control of June. And looking at the rejections of how price reacted is that we had several reactions. We have the one reaction, second reaction over the beginning of July, this point of control. Now, also, we had another one, so the price was trying to react and buyers were trying to push the price higher again from the same area, which eventually got failed, right? And we see the breakthrough, the rejection, and the push down to the downside. This is the first time that the price came back to the same level since that moment that we broke through it and went much lower. As we can see, the price tested this level perfectly several times. As long as the price keeps holding below 35.53, I'm looking for sells on GU. And I want to see if the GU can go at least just a little bit lower, actually, like 10, 15 ticks, 12, maybe 12, 15 ticks is the target that I'm currently looking for GU. And then the continuation back towards the other zone, which is the major zone. And one of the main ideas for me for the end of the week is this range here is a point of control of the second week of July, is the developing point of control of the month, and is a high volume node over this whole move to the downside. So it's one of the biggest areas here as well for GU. So if the price breaks through this, and if my short ID currently, the one that is running, fails, and if we can hold above this area, I'm going to be looking for the continuation to the upside here and for the sells when we reach this area. So that's my GU ID. But I agree with you, it doesn't look as clean as, for example, EU. But I'm expecting the small push at least to the downside on both of those still.
Yeah. Yeah, it's just GU just seems stronger, doesn't it?
It does, because at least EU is, as you can see, GU has been in the same range, right? It's been just flat, while EU has been slowly going down, right? Yeah. So at least even just from the pure price action, GU does seem like holding stronger at the same zone as EU.
Exactly. Adil is asking us to have a look at Euro NZD. Let's have a look at Euro NZD. Already 0.9% on the day. So you're already looking, I mean, look at, geez Louise. But this is the same. You're seeing the same on Euro NZD as you are on Euro Aussie dollar as well. See that? Euro Aussie dollar has sold off massively as well. So I was actually looking, as I said, I took the buys earlier on Euro Aussie, but it hasn't stopped yet. So I'd probably be more inclined to look at Euro Aussie personally. 1950 is a deal's entry though on New Zealand Aussie. So he's gotten in here. I mean, it looks really, really overextended. It looks really, really oversold, if I'm honest. I don't know how far you might go. If I was going to look for support areas, I'd be looking on the 15 minute. 15 minute might come down to here, for example, which is almost there. So 19.4. That's maybe an area to consider buys. But there's even, there's liquidity down here as well. So the way that it's selling off, I'm not sure what is just, I mean, the euro is weaker. So this is why that's why the GU isn't selling as much as the euro is, because the euro is just generally very weak, and that could be in preparation for the PMI tomorrow. Pre-positioning for those results. The New Zealand dollar and the Aussie dollar are looking very, very strong. Hence why you're seeing the massive sell-off against the euro. But the pound overall isn't particularly weak. Yes, it's a little bit weaker, but it's actually not as weak as the dollar right now. So that's why that adds confidence for me to maybe focus more on Euro USD rather than pound USD for sales. That can obviously change, with the home sales results and things like that. But I'd be looking at, that's why I pulled out Aussie Euro, Euro Aussie earlier for that scalp trade, because I just think that's going to have to pull back in. So when I pulled up the chart and I saw how it was playing out, well then it kind of made sense to try and see if you can catch a pullback up as it heads down. So yeah. Dr. Ahmed, we have looked at gold more times than you can say gold in an hour. If you go back through the stream, you'll see. But Anastasiia and I are both looking at sells. The sells may have actually stopped on gold because we've tapped into this teeny weeny tiny little pocket. You see that there? But let's see, how far did it go? Did it go down? Yes, it created a perfect equal low. So I think it did, yeah. So I would be careful trying to catch any buys on this, because that's a perfect equal low, suggesting that it's going to come down for that as well. So it's probably just going to try and grab some of this liquidity that's left here and then sell on further down. Where might it sell from? On the 1 minute, it's not entirely clear, but you might get something in here. Something in there. So it might come up, sweep this, and then pull down again on gold. So yeah. But Euro Aussie finally found some support, but it's not really anywhere of where I would necessarily expect it to find support. So I'm not. I don't know. I'm not sure if Euro Aussie is still going to sell off a bit more, and if Euro is just generally just going to be a bit weaker today. You can see it's selling off against the pound, so that's why we're seeing that strength, that relative strength compared to the euro in the pound. Hence why we're seeing this sell off as well. So I'm not sure about gold. Gold has had a couple of really massive days. As you can see here, Monday and Tuesday were just really, really big pumps. So I think, personally, I feel as though we're probably going to get a little bit of a breather on gold today. I don't know how far we're going to come down. I think we might just we'll see what New York brings, but I don't think we're going to see necessarily a massive engulfing candle to the downside, because that signifies a massive, significant change of direction and the swing down. I think probably what we're going to see is something like this, retesting it and doing it maybe in a more measured manner rather than just selling off.
I would expect the consolidation on the highs, and then maybe like a choppy move to the downside. And looking at how it's been ranging the whole morning, if this is how it's going to continue, that's not the trade that I want to be in.
Yeah.
Because if I'm going to keep holding this trade, and it's going to keep going up and down, even if in the end it hits my target, the headache that is going to cause overall over this whole trading day is going to be much more expensive for me than the profit that I'm going to make on that. So I'm out of gold. I'm not really convinced about selling it. I'm in a sell. Like I was in a sell. I'm looking for shorts. I don't really see the good price action right now, the good momentum to keep holding it. So eventually, if it goes lower, somewhere today or tomorrow, I might look for the short-term reversal and move to the upside as a pullback or the correction before the continuation to the downside. But I'm not holding it anymore right now. We are at the value area low of the day as well. So at the lower range, lower boundary of 70% of the volume for the whole day so far. It's been rejecting it already for the whole morning. It is rejecting it again right now. Like literally as I'm looking at that, the wick that you see is from the value area low. I'm really convinced it's going to go slightly higher from here again.
Yeah. No, I agree. Sunil, if you spam the chat, we're not gonna be paying attention to you, and you'll just get banned. Okay, so if you want us to look at something, this goes for everyone. If you want us to look at an asset, we're more than happy to do so, guys. But all you got to do is pop in the chat. What is it you're looking at, and what is it that you see, and then we can tell you whether we agree or not, right? Because this isn't a signal service, right? So if you want us to have a look at something, tell us what you're seeing. Tell us what you think is is happening on that particular asset, and we'll go and have a look at it for you as well. Okay. So yeah. I'm just going to check and see whether LJ is joining us, because it should be our ABL segment right now. So let's see what he's up to. Because I'm sure you have many other things to be getting on with as well, Anastasiia. So we don't want to keep you longer than you have time for, because I know you have many other interests and other things going on.
Mike, but you're still here earlier, so thank you so much for keeping me the company for another half an hour. It was a pleasure.
You're most welcome. Here
look at this.
There he
went. Did you forget about the ABL section?
You just sat in the wrong studio. I sat in yesterday's studio.
Did you not think? Where is everybody? Did that not?
No, because I had the stream up here with you guys on, and then I just heard you say that, and I was like, oh wait, put me on when we were ready. So
I'm curious, if you were in the wrong studio, didn't it bother you that there is no one there and the stream is not going on?
No, I was looking at other trades, and I just brought it up in the corner.
You could just hear us.
Yeah.
So no worries.
It's just been sitting there, and
How are you, LJ?
Apologies. Doing well. Yourself?
Yeah, good. Good week so far.
Yeah.
Yeah.
Good to hear.
How was? Did you finally take some break, or did you keep working?
A little bit over the weekend, but then I did get a solid break on Monday. Didn't look at charts, didn't look at anything, no emails, no nothing. Just fully took the day off. So that was very nice.
First time in like 12 years.
Yeah.
Wow.
Yeah.
First actual day off. Didn't go to the gym. Literally did nothing the whole day. So yeah, it was nice.
I was shocked too. I was really shocked too.
I'm impressed.
Yeah. Anastasiia, always a pleasure to be on stream with you. We've got our regular Thursday morning tomorrow, so I look forward to seeing you tomorrow.
I'm looking forward, Mike, as well.
Otherwise, we're going to head over onto the ABL segment, guys, and we'll be right back after this.
See you.
Cheers, guys.
Yeah.
There we go. There we go. Welcome back to the ABL sideshow. Should we do a bit of
ABL?
I don't know if anyone can hear that music. There we go.
No, I can't hear the music. Need to pump up the jam.
There we go.
Yeah.
Well, it's on volume 4. You told me the volume 4 was, the optimum.
Apparently, that's what I've been told, but mine's always quiet, right? So I'm not sure what it is for other people. But, yeah,
we'll see. We'll see. But yeah, Jonesy, good to see you, mate. Hope you're well. Few bits and pieces happening since our live stream this morning, so we can go in and have a look at those. The main one though that I pinged you a message about as well was Euro Aussie and Euro New Zealand as well, having a massive sell-off today. Anything you're seeing triggering that from what?
Not really. I think it's just the overall Euro weakness across the board.
But a lot of strength. A lot of strength for the Aussie and for the New Zealand though.
Yeah, I think that's part related to a few things calming down as far as some of the trade talks. For instance, with Japan, obviously Japan being Australia's number 2 trading partner, right?
Yeah.
So that's obviously lifts those sorts of things. We've had a number of the key data points for the Aussie out of the way now. So it's kind of, general risk on sentiment prevailing overall. I think that's pretty much what we're seeing. Same as how we had the dip on the NASDAQ yesterday, and we've sort of recovered pretty nicely. Again, it's got a bid underneath, and so it's just general risk on across the board, I think. So, yeah. I think we are coming up to a peak now as well, because the further push, we hit some technical levels on the Aussie dollar, for instance, and now we've run up to the sort of, call it relative all-time highs as far as the past 2 months, 3 months, up here around that 65.95, and we've sort of hit a bit of a wall here. So just per your Euro Aussie trade, we might now see the switch point. And I know Anastasiia was talking about shorts on Euro dollar. I'm not so sure on that. I think we are going higher. So
Euro USD looks better for shorts than pound USD, for sure.
Yeah.
I can see where she's got her bias for the sells on Euro USD. But yeah, it's I think they're all showing a bit of weakness, which is why it's slowing down the moves overall. So if you look at the ticker along the top of the screen right now, you can see Euro against the Aussie, against the CAD, against the Swissy, against the pound. Euro's down against everything. All right.
Yeah.
Now obviously the PMI
0.5% up today, so hence that risk on flow as well.
Yeah, exactly. So we've obviously got PMI coming out tomorrow for the Eurozone. But do you think this is possibly just positioning ready for that? Because most people know what's going to come out with the PMI and stuff like that. Euro's so predictable, right?
Yeah, I think it's just mainly, flows driving today. You can go over and look at the bond market differentials. There's a bit there's translating through there as far as the differential in euro dollar. Um, you know, dollar bonds are up a bit more than the euro bund. And so when you've got a bit more technical day, no headline news, no data, that kind of stuff, those sort of flows tend to determine the overall drift in the market. So the same thing how we've seen, I mean, I would say euro dollar doesn't look strong, but I wouldn't call it weak either. It's just a bit languishing, kind of, right?
Yeah, exactly.
So my feel is, though, that we sort of sit these kind of levels and then potentially just drive up from here. And as far as where the Aussie dollar and that whole risk-on type complex is right now, the priced options for today for New York cut say that indices should actually come off a touch. So I'm wondering then, with things like Aussie dollar having that risk proneness to indices, being will that pull back a bit in that risk off sort of move? Euro dollar stays pretty stable. The dollar finds its legs into New York. Dollar yen is looking pretty weak. It's been driving down further. Do we get that another leg lower in dollar yen, and then hence euro dollar up? The pound looked pretty reasonable, pretty arguably strong, like you were saying. And then I think euro dollar will also come up. It just won't necessarily run like the other guys. So you see Aussie dollar come off. It punches back up as well in line with that, but just not to new highs. Just probably makes an equal high to where we are now. And I would say that's my kind of outlook coming to New York.
Looking at the strength scores, I mean, it kind of adds the narrative there, what we're talking about, right? So, we've got, the pound showing some weakness, right? The CAD and the yen are really not doing anything at all, but it's the euro that's really selling off against the Aussie and New Zealand, which are the only ones showing strength right now, which is why I was thinking whether there was anything that I'd missed down under that has happened, or has, maybe triggered that strength to come into those two.
No, not that I've seen. I haven't seen anything pop up. It's just more of, like I said, all the sort of the risk elements as far as news flows have kind of been priced in now. They weren't too bad. It's kind of the same picture, and then you get that general drift up. You got a slightly better outlook as far as the tariff situation with Japan or a potential trade deal. That's helpful overall to the complex. So I think that's just the general drift for today. Again, more of just a flows type situation than anything particular driving price.
Yeah, I mean, I still see some weakness coming into Euro Aussie. I mean, it doesn't look entirely convincing that it wants to go back up just yet. Just the way that it started with this inside bar on the 10-minute as well. I mean, the thing is, it's sold off so heavily from here. But
I would say this is where we're forming that structure, though, right? Where
I do think we are, but I think we've still got something. I still feel like we've got a little bit further to go down. We've got this nice supporting wick, right, on the 4 hour. So I do think we're going to see some buys, but the way it's starting on the 1 minute doesn't quite feel like it's ready. But maybe I'm wrong. This is technically a retest of this one. So it could be that it's ready to go. But you see how it's reacting off that 1 minute inside bar there. I'm just not seeing the setup that I would normally look for when trying to get into a trade. It's all it's doing is creating liquidity on either side of it. So I'd be looking for further retests of the lows and see whether it's going to hold against this area here.
Yeah, no, it's fair. I think we're definitely building the structure. I would say that because you can see euro dollar starting to level out as well. When you look at the 15, Aussie dollars sort of hit that slight wall as far as momentum continuing. We're looking a little bit tired. We're about 0.6% on the as far as gains for today. So as far as the ATR, and then considering that yesterday as well we had quite a drive up, we might be a bit extended per the Aussie right now. Well, not extended, but say quite fairly priced.
Yeah.
In that manner.
Yeah, absolutely. Got a few comments coming in. So Antonio, tell us what you think. We will happily look at any asset you guys want us to look at, but we want to know what you guys think, right? We want to know what you guys are seeing in the charts yourselves. So tell us in the chat, and we'll go and pick it up, and we'll go and have a look at it. All right. How can we enable the heat map in TradingView? Do you mean the Forex heat map, if that's what you're referring to? I think it's just on their homepage, isn't it? If I'm not mistaken. I'm trying to think, where is it? It's somewhere in here. I think it's in the screen, is it? Not stocks.
I would imagine it would be. I don't use TradingView for this stuff.
I can't remember where it is, but it is somewhere in there. If you go to TradingView, just Google it, TradingView heat map, and it's there and available. So yeah, you should be able to find it there, Don.
Actually, you put my screen up as well.
Yeah, Ishan. Yeah, we'll look at Ethereum as well, but tell us what you guys are thinking. Right, this isn't a signal service, so we're not just going to give you guys, our thoughts. We want to know what you guys think as well. Join us in the chat. Tell us what you're seeing. Tell us what you're thinking. And we'll go into it. All right.
And if you do have a question on a certain asset or ticker or whatever, what kind of time frame are you looking at? The next hour or something? The next 15 minutes? Are we talking the rest of the session into New York? Are we talking overnight, tomorrow, next 3 days, a swing trade, that kind of thing?
Yeah.
Context is good.
Context is key, I would say. Context is key. Otherwise, we just don't know what we're looking at for you guys, right? So there is, I'm assuming this is what, reconnect. I'm assuming this is what Don was referring to. This. Yeah. So you can get a heat map if that's what you're talking about. You can go in and get a heat map of the Forex pairs, no problem. But you've got to go in and you've got to find that URL, right? So just Google it, currency heat, cross rates heat map, and you'll find it in there. So yeah, the Dixie right now, as you can see there, down against pretty much everyone. Up against sorry, I'm reading this wrong. No, I am reading it right. We're up. My brain has stopped braining. We are
down against
we're down
everything except the
yes,
euro.
That's it. Right, thank you.
Yeah, and the franc.
Yes. Yeah. Sorry, my brain just completely switched off for a second. So yeah, there you go. So there's the heat map. If anyone wants the heat map, go and Google it, and it's just under the markets. Go to their homepage. It's just there. Okay. So Dixie bearish. We were looking at this earlier, weren't we, LJ? Whether we thought the Dixie was bearish or not. Generally speaking, I think we're both of the opinion that overall, I believe that it is bearish, but I don't think it is yet. That's my sentiment. Since we spoke this morning, we haven't really done anything to suggest that the sellers are in control, but we also haven't done much to convince me that the buyers are in control either, right? We were talking here, and we've just ranged, pretty much. So we've not really done anything convincing one way or the other, right?
Yeah. And that's exactly expressive of what I was saying with the euro dollar as well, right? It's a little bit weaker today, but it's not exactly looking like it's falling out of bed. Yeah. Doesn't particularly look strong either. So, hence that's going to be, as the majority component of the Dixie, reflected there. What I would say is dollar yen has definitely been a bit sour. And then you got the pound with a slight outperformance today. Probably in part due to that bond movement as well, seeing as it was getting absolutely battered the past sort of 2 weeks or so from the government side of things, which flew over into the gilt market and then shifted the currency moves. So we've seen a bit of settling of that, and then hence a bit of a retrace in the pound for now.
Jonesy's exactly right. Jonesy knows when I need some caffeine. he just knows when I need some caffeine. So yeah. All right, here we go. This is what we want to see, guys. Right. Rajiv says he's looking for sells on gold on the 1 hour. So let's have a look. Looking for sells below 3419. So I would argue that this is your support. So if anything, I'd be looking for sells below this line here, which is 3416. That would be my argue for sells. If you break below there, then maybe, but you've still got this big support section here as well. So support for sells. I mean, I was trying to sell gold yesterday, and man, that was a bad idea, right? I was trying to sell gold from here, and look what it did. It just skyrocketed. I know Anastasia's looking at sells. I would like to see sells just looking at the higher time frame, but I just think we're, as she said as well, we're more likely to just range up here a little bit and start, creating pockets of liquidity either side of us. You can see all the lines that I've got drawn out, that there's plenty for us to target. And as we spoke about earlier this morning, we are at this 261 level on the higher time frame fibs. So we are very, very much overextended, and we are due a correction. Question is whether that's going to be a quick correction or a very, very slow, choppy one. Now, we all know gold, and I think we all know that it's going to be a slow and choppy one. That's probably the most likely scenario. So I would be cautious about trying to catch a sell on gold right now, if I'm honest with you, Rajiv. Just the way it's just looking right now, I mean, you've not really got anything for it to target or bounce from. There's nothing in here of major liquidity one way or the other. So that's why I just think it's going to range. At the moment, you've got this cluster up here suggesting longs on the 5 minute, and you've got all of this up here as well. So I wouldn't be, I'm trying to see if there's anything down here, but there's nothing doing. Nothing here saying, let's go lower.
I'd only see shorts right now per the current price action if we broke 34.16 on a very clear, impulsive candle punching right through it, not teetering around there, back and forth on the 5 minute, playing around. If we saw an actual punch through it, then I'd see potential shorts. But even then, there's a cluster of liquidity between 34.07 and 34.11 per the CFD chart, the spot market. If you cross that over to the futures volumes through there, so you've got that cluster in there, and then you've got the prior heads coming in at 34.02. So even if you did press that, you've potentially only got $4 to $11 downside.
Exactly.
I could easily see us getting, captured there, finding support, rallying back up, and then we drive right on to the highs that we made yesterday around that 34.40. And so hence risk reward wise, you got $30 or so plus a potential break to the upside, and your downside's only looking at 5 to 11 or 12 per ounce.
Pound Aussie looks decent. I would say Euro Aussie looks better potentially. We've come down, we've taken those lows, and now within that area, and that's a nice little setup now. So I'd be looking for buys now on Euro Aussie on the 1 minute. Look at us coming to take. We've taken all of these levels of liquidity, and I'd be looking for us to now come and take these clusters up here and to push higher. We've dipped down into that 4-hour wick that I was talking about. So that's a nice little structure on the 1 minute. Potentially looking for longs. May or may not hold, but we'll see.
Yeah, definitely. I think we're getting close to that. I think euro dollar has to find its more firm bottom before we get that full reversal. So it's still trying to sort of plunge through a couple lower rungs. You got 117.20, which is a stronger historical kind of level. And then the gap between there, 117.10 and 117 round number as well. So I would say that we find the support in there somewhere. I think if I jump over here, this is what I mapped out in ABL, and we're kind of coming.
Hang on.
I'll set them offline.
There we go.
There we go. So we're sitting around here per sort of pre-London. We've now, wafted about this kind of price area in this, today's range with a gradual tilt lower. And there's another cluster of areas through here as well, both with options and some of the futures levels through here. So almost similar to what we saw yesterday, where we made this slight new low. Almost looks like we're gonna, drop lower. It finds a base through here. Next candle picks up, and then we drove higher. We had a similar structure on gold that played out the other day also. So we're now approaching those levels. So this will be the kind of test point, that 117.20. And then if you don't hold that, again, it's like I was saying, similar picture to gold. They've got a very similar structure today, both euro and gold. You've got another set of support just beyond that. So as far as total capture going short here, it seems like very much a grind, and you're not looking to pick up much. So I'd rather look for buys somewhere through here, say at either this level, and then target highs, wherever, or a touch below that.
And also, let's not forget that the euro overall is just looking so weak that it's going to have to correct to some extent, right? So there will be some strength that comes back into it at some point, because like with all of these, particularly with Forex, they don't like to be overextended, right? They don't like to be 1% gains or 1% losses, right? That's too much for the central banks, particularly to accept on a given day, right? So they would much prefer to have maybe 0.5%, maybe 0.2, 0.3, somewhere like that is where they feel comfortable. Right now, obviously they can't always control that, but they're not going to want to have an entire day just a massive sell-off, because that means that something catastrophic has happened, right?
Yeah, I mean, it's just like we had these big drives up through the past couple of days, so is it natural for us to just kind of wander back down a little bit? Like this is just, general random waft of price action, given we don't have any major headlines or news events, anything like that on the cards today. So naturally you would expect price to just shuffle back a little bit after, because what was the base here? Base of the wick there was 116.80, call it. Right to the top up here, 117.60. Right, so you had a 80 point just pretty much one-way train, straight drive. If you pull back a touch from there, naturally, right? And then that's on the back of the moves from the prior day as well, where it drove up, through there. So Hence, I think this is your area to see if we find some kind of support, build a more constructive counter narrative on the 15-minute, 5-minute, and then see if we get another move higher. Question then, you could, where's this guy? Okay, give me my good old brush, good old Picasso here. You've got a bit of a trend line coming through there now with these tops, right? There's kept price roughly even. So, find somewhere around either the midpoint or the low point here and look for a bounce and then a test of that level again. That, I would say, is probably the most favorable or optimal outcome as far as risk reward as well.
Exactly. Let's catch up on chat. Antonio earlier was talking about NAS, so thank you very much, Antonio, for your views. He thinks we're going up to new all-time highs. The week's internal liquidity has already been reached, so for me, new highs. We were looking at the NAS and we were thinking of sells, weren't we?
Yes, and I jumped in this sell. I'm still in that. It looks like I got tapped there, but I didn't. My actual trade on MT5, I had this above the 200 there. So I'm still sat in that. Part of the reasoning for that is the 23,066 level here is also where we have today's implied probability from today's options expiry, right? So 23,066, that's the expected move of the price distribution for today. And so often you get the drive towards those options levels just before New York, then the options clear, and then price moves on from that at the New York Open. So given we had this big fall, a bit of a reclaim today, we're coming into general retracement. Like you can see the price sort of swing point here, come into those heads, naturally pull back off, and you got a short take there. Not a massive move or anything. But given we're very technical today, no big drivers, no news, that tends to be what pushes things around. So,
TechFoot's asking, what is the most volatile scenario for Bitcoin? News, IPC, trade taxes, some company embracing Bitcoin. I mean, you'd know this better than I do, LJ, but I would say, frankly, anything. All of the above. All of the above can be triggers for Bitcoin, right?
I think as far as the most volatile right now, I would say it's any large company announcing things like a Bitcoin treasury, something like that, or a country saying they're going to add a Bitcoin treasury of some form to their stable. I think the old news that would have typically moved Bitcoin in terms of, I don't know, some new company opening or a broker or this or that, or wallet addresses, all that kind of thing, doesn't really hit the mark anymore, just because the total market cap of Bitcoin has increased enough that it smooths out a lot of that high beta fluctuations, right? So now it's only those major things where there's a really, really big player adding significant amounts of Bitcoin to a treasury or something that is really going to shift the market. That, or potentially something like a hack or something, of one of the large crypto firms.
Yeah, exactly.
Yeah.
Cool. So hopefully that helps. TechFut. We've looked at the NAS. What else have we got? We've got Ishan saying, I'm looking at a long entry point for ETH on the 2-hour time frame. RSI looks around 40 and the MACD looks okay, but can't see any movement. Maybe that's because there isn't any. Ishan, that's the thing. Sometimes, Bitcoin, we were talking about it earlier, weren't we, LJ, that Bitcoin is just ranging right now on the 4-hour. So if Bitcoin's not going to be doing much, then it's fair to say the others probably aren't going to do much either, right?
Yeah, so Ether's played, as we can see, this price action, we played a bit of catch up. Like Ether's been very much lagging this cycle as far as the sort of secondary majors in the crypto sphere. We've now played catch up mainly because everyone's been looking for things like Bitcoin, Solana, the other big guys to run a bit harder, a bit faster than they have. And then they haven't, so people try to look for alpha elsewhere to play the catch-up game. And you sort of go through those cycles in the crypto sphere every period. So now we can see Bitcoin here is consolidating this high area. Right now, this is looking like a reasonable position to start buying. We're seeing some support here. I think we were talking about that in ABL earlier as well. On that 4 hour, the 1 hour, we've come into a cluster of the moving averages. This is right sort of in the middle of this consolidated trading range that we're forming here. So you could potentially see this as picking up as a further buy, as obviously everyone's sights now after getting to this 120 range are up towards the 130s, 140s, and then 150. Then beyond that, obviously you got 200 and the likes. So as far as ETH, you probably need to see, it's now doing a similar type thing to Bitcoin. We're consolidating this area. You'll see Bitcoin drive first, and then ETH will play catch up with a slight lag. So that's what I'd be looking for.
Yeah, exactly. Good stuff. Let's see what else we got. We've got Miguel looking for sells on dollar yen. We've got Anwar looking at a support level on Euro CHF. So let's have a look first of all at USD. Miguel, give us a time frame. Give us more context. You're looking for sells, but on what time frame? The 1 minute, the 5 minute, the 1 hour, the 4 hour, the daily. Tell us what you're looking for, and then we can give better context.
For now, dollar yen definitely seeing very much this weakness. So this was yesterday's price action, and this was the move marked out that we needed to see for dollar yen to really hold this area. That was that the Diplo there with the Powell, Jerome Powell freak out, that kind of thing. And so we had a cluster of sort of support band formed all through there. So we really need to hold that yesterday and then drive up to these highs again and test the previous high through Asia. Or that was late London, I believe, actually. And then see if we could bust that and then drive a bit higher. And then you're testing the underside of this higher short-term consolidated range. We didn't get that. We dropped down further, smashed right through it. We had a bit of, you can see through these candles, this is around the capitulation just earlier today. If we go down to the 15, you can probably see it a bit easier. Around the news with the Japanese Prime Minister potentially resigning and stepping down after the poor election results. That was then turned around, said, no, fake news, complete rumor, not stepping down. So then things, recovered and we've had a bit of a shift around through Asia and then into London. Since then, we're very much heavily trailing off. Right now, it looks very soggy. It looks as though we want to keep running down. These levels we're at just earlier, around the 146.70 level, was the start of European trade, and looking for a target down here in the 145.40 to 145.80 zone next for euro dollar. And right now we're very much on the move down there. And you've got these older trend lines through here, and support levels. This is sort of a flip level that we've had between the 145 to 148 and the 145 to 140 level just here at 145.20. So this is where we get back into the kind of neutral zone in those two sides there.
Yeah,
and that comes in with the cluster of support through here.
Rajiv saying we're at all-time highs on ES. Do you think going shorts will be a good decision? Rajiv, never try and short an all-time high. Just even I know that, and I'm a complete degenerate, right? And don't try and short an all-time high because you never know what's going to stop. That's just you're on a journey to a hiding there, So no, don't try and short an all-time high.
All-time highs tend to lead to more all-time highs until some specific event changes that. It's always an event that changes it. The same way when you get a recession or economic crash, it's because of like the Fed made the wrong move or something else happened, like material with banking or something. Bull rallies don't die just because they've got overextended and it looks silly per the amount of money in the math. It's always something that skewers the bull,
exactly,
to kill it.
Precisely that. Progress is saying, I think the euro will buy hard today once it breaks above the opening candle. What do you guys think? What time frame? Opening candle on what time frame? Are we talking about the opening candle on the 1 minute, or what are we talking about? We need more context from you guys. Arnold saying, I'm looking for a buy on the 4 hour from GJ at around 196.800. Do you guys see the same on GJ?
As far as euro dollar, I am seeing potential buys through here. This is kind of that structure we were just talking about. There's a cluster of levels through here with futures, options, that kind of thing. You get that slightly lower low, forms a nice candle, nice base through here, and then drives higher. So we might start to see that soon. If we go to GJ,
I think looking for it to come down that far, I'm not sure.
we're looking at 196.80. Ooh, that's way down.
Yeah, I think
we do have a all-time level there. Which is down by this cluster.
There is a pocket there, but I mean, we're sitting on.
It's like a month ago.
We're sitting on a big old trend line on the 4 hour, and we're just testing it at the moment. So I wouldn't be overly confident that it would come down that low, and that assumes that the yen is suddenly going to see a massive amount of strength coming into it. Which yes, it could, but geopolitically right now it's still a little bit too unstable, right? You know, they've lost the upper house and the lower house. He's saying he's not resigning. He's just done a deal with the US. It's all a little bit murky, and the pound has had such a pummeling that the pound is now starting to show a bit of strength again. So I wouldn't necessarily see it coming down that low.
And they've also been disconnecting. So you can find, so as far as there's no larger economic news, no huge bits and pieces going on driving forces for markets today. It's a lot of just technical trading, like we were saying. So hence the other yen crosses are falling in line with dollar yen. That said, what we've had recently being the theme is that the entire rest of the yen cross, right, will drive up. So that's euro yen, pound yen, AUD yen, New Zealand yen, the lot. And then dollar yen will proceed to come lower on its own and show further weakness. So they've somewhat disconnected there. And then given what you're saying, it's just sort of wafting off with the general activity of dollar yen today because there's no major bits and pieces going on. If pound dollar manages to consolidate here, we get this move that I'd mapped out. We're roughly into that sort of support pickup area right here, which is just the prior heads of this consolidation through Asia. We then tap through that a touch, we pull back into that. It's a break, retest, and run, and you get the outsized moves on the pound. And then potentially as far as pound yen, you could see a bit of stabilization through here. You might get this overpush, find stability here about 197.80, and then move back up purely from the pound driven portion. And then, I mean, the moving averages will come in like that. This is where you had the base of that trading through Asia up here, right? So you potentially see more of a move to here, heads of there, and then this is the support through here as well. And that's the crack level where we ran down. So I potentially see more of a move to 197.80 or so, and then a bounce back up to 185.50. Probably more likely than a full failure. For a full failure, you'd probably need to see dollar yen really accelerate. and absolutely push right for 145.20.
Yeah.
But I would say we start to capitulate, slow down here, maybe pull back up, and then sort of just gradually waft off to 145.80 for today. I don't think we'll get the full extension, down another 100 points. So,
Antonio, we did look at the NAS. We looked at the NAS, so I'm not sure. Go back, but we definitely looked at the NAS. Am I imagining that? I'm sure we did.
No, you're not. No, we're talking about this. This is the short I'm in for the NAS. They jumped in earlier during London, and looking for a move down to here, which is where the options cluster for today's expiry, New York time. We had the big drive down last night. We've had a bit of chop back and forth today, climbing back up. We've met the undersides of where we sort of capitulated and fully ran from. So we've come back to those liquidity levels, now naturally drive off. Again, we don't have any major catalysts on the board today, so you get a bit more of a technical trading day, and thus things like options can pull price. Because as you get closer to the expiry, gamma increases. That basically means that the brokers supplying the options, which have to fulfill the other side of the orders, buy up the asset as it gets closer to price of expiry, in case they have to fulfill those orders. So you'll tend to get a drive to there pre-New York, wherever that options cluster is, and then from there you'll get either, so you'll get like a move down, move back up, and then a full crash through, or it'll just drive back on, and then that'll just be whatever open orders come into the market at New York open.
Yep. Good stuff.
So that would be my outlook there.
So, Antonio, hopefully that re-answers your question. And now, Forex. Euro USD 15-minute. London session just took the lows of the Asian session. I'm looking for buys, and Euro USD is in a bullish trend, and no higher low has been taken yet to suggest a reversal of the trend. Seems like a reasonable assessment. What do you think, LJ?
Yeah, that's pretty much what I'm looking for as far as euro dollar as well. Like I was saying, we've had these big runs up. I caught some of these moves yesterday. The second trade, I jumped in slightly too early. Got stopped out on that, but then just re-entered down through here, held that right up through New York. And then, seeing as yesterday and the day before, we have had a pretty big run up from about 116.20 odd, peaking at 117.60. So, it's not unsuspecting that we get right now it's, 35 point move lower, yep. Right? After running up 160 points, 35 points pulling back is pretty expected, right? So yeah, I am expecting us to find some support in here. There's a cluster of futures volume areas through here. There's some options levels through here as well. We sort of drive through here towards New York, find some kind of a base, and then potentially move up. But yeah, that's probably going to be slightly closer to New York open, however, I would say. So if you're looking at the 15 for the next 2 or 3 bars, might be a little bit too early.
Yeah. Anim Treasure is looking at the USD CAD to buy at 35.4. What do you guys say on this? Depends what time frame as well. Tell us the time frame. Tell us your what are your what's your stop losses? What's your take profits on this? Again, might be suitable on a swing with a big stop loss. But
this is this is Akram will know. Akram, I think Henry was there as well. This is from one of the Discord sessions the other week, where we had this price structure through here, and then someone saying it looks like Bart Simpson, and then so we drew Bart Simpson, and then with the eat my shorts.
Oh dear! There you go, guys. This is what you're missing out on the Discord sessions with LJ.
$1 million drawing over there. I'll be in a art museum somewhere someday.
Yeah.
But as far as actual price action, guys, what level were we saying again? 135.40. I mean, that's a ways down. I would say if we're getting to 135.40, we've sort of looks as though we're probably creating a break lower, to be honest.
Yeah.
I'll be looking for this sort of angular shift through here for us to basically find support roughly where we are for buys. I think cracking below this 135.75 would tell you that we're going much lower, I would say.
Guys, anyone's
4 hour.
Anyone's selling gold right now, I'd be very, very careful. Just so you know, that 1 minute structure doesn't look like sells to me. I'm just saying it. So, looks like it's going to go up, and it is going up on the 1 minute right now. So, I'm just saying. Be very, very careful. Make sure you follow your own analysis, and don't try and catch something that's already gone. If it doesn't fit your plan, don't trade it.
We can jump back to gold in a sec. Yeah, I would say probably as far as dollar CAD, I'd probably be looking for buys from here. That obviously goes contrary to what we were talking about, the dollar complex overall driving lower. So that's probably my main concern, that if you don't get the buys in here, then you're heading towards that 135.40 level. And if you're there, I think we go much lower, like down into 134s and beyond. So I would more be seeing this as a trigger to continue selling if you don't get that buying pressure coming in through here.
Yeah.
Oops. What were you saying, gold on? What was it?
Gold, yeah. Just had some comments in the chat saying sell gold now and trying to generate FOMO. Yeah, I'm just looking at the 1 minute. It doesn't look like a sell to me right now. It's bounced off a really nice pocket that I marked out earlier, and is currently pushing higher, going for the liquidity levels that I had marked out earlier. So yeah,
I think
that 1 minute candle. Wait and see how it closes. The current 1 minute candle. Just wait and see how it closes, because it might you can get emotional with these 1 minute candles on gold. They can be really, really nasty. They can make you think, oh, it's changing direction. Look at that big move, and all of a sudden it flies back the other way again. Sometimes within the same candle. So I would be very, very careful. It has reacted off a nice area on the 1 minute, or it is reacting off the 1 minute right now. But it's not convincing for me right now that it is necessarily sells. I may well stand to be corrected here, but I just think if we're going to be ranging, I just think we're gonna chop.
Yeah, I agree. I mean, looking at the 15-minute here, it looks as though like this is looking constructive for buys, and this was the good old freehand structure drew out before. If I just pull that away, just so you can see the chart a bit better, you can see we've come into the 100 moving average here as well, and finding a nice little cupping here.
Yeah,
and looks as though I'd say we'd push on through here. 34, 27, 28 is that next sort of pinch point, whether it can actually break beyond there. That's around where we got the candle closes per the Asian session, and I believe that was early Asia. Then this was the start of just pre-London, right?
Yeah.
So if we get the push up to there, and then I think very much we could see that drive beyond, just like we had with this hockey stick from earlier in ABL, which was like.
If you look at it on the 1 minute right now, it's going. So as I said to you guys, just please be careful. If you see somebody jumping into chat saying do something now, ignore it. All right. If they want to do something now, let them do it, but please don't destroy your accounts based on somebody else's random comment in chat, because you're almost certainly going to get burnt quite badly. So yeah.
Euro-yen. We'll go Euro-yen first because
I've seen. Yeah, sorry. Yes, we did have a request.
It was first. Let's go further out slightly. I mean, Euro-yen is going to be similar picture to pound-yen. As you can see, similar structure. Then per the recent price action, we've just kicked on a little bit further than pound-yen, like we were looking at before. And that's obviously with today's relative underperformance from the euro side of the complex. Similar deal though, I would expect euro dollar pound to find some kind of support here ultimately. And then so fair chance we get a bit of a corrective move. And then any of this, people expecting this to be somewhat of a break and continue lower. A bit of a fake out, and then we drive back up. Because US dollar yen is punching lower. We're now coming into the support levels here. And like we touched on just before when I was talking about pan yen, I think we get a slight corrective move higher just because we've been coming off now for a couple hours. Dollar yen. And then dollar yen can move down. However, the rest of the yen complex has been moving opposing to dollar yen itself, which is typically the larger driver of the overall yen complex. And that's because of that heavy dollar, overall dollar selling narrative that we have in the market right now. So, Henri, talking about Aussie dollar shorts. I'm currently in Aussie dollar short. What level specifically did I get? 65.93.7 is where I'm at. Henri. 63.97. There we go. So that's where I'm currently at. I've got to stop at 66.025.29. That'll do. And then where was I? Where do I have my TP? I forget now. 71.
Nuggets of nonsense.
Short take.
And littygrams. I don't know what you guys are seeing on gold, but gold is going higher. It's not coming down, right? It's just, I'm sorry, I'm not seeing it. But maybe you guys are seeing something different on a different time frame. I don't know what your strategies are, but if you think you're going to be selling gold, then share. Don't just say share. Sell gold now. Give the rest of the guys some context, and we'll look at it. Otherwise, it's just noise, and it just creates FOMO for others.
Yeah. So Henry, this is sort of where I'm looking at, and then that's sort of for today's move because I'm wanting to see this through New York session, and then further if that drives further or coming into tomorrow, then I would sell this further down as far as 65.50, probably this kind of circuit area. But then basically I'd look to take profit on this trade about 65.70, just a good little 23 point take with about a 9 point stop, and then if we get a convincing continued drive, then I just re-enter the trade for another 20 points or so there. And there you go, Akram talking about the Bart Simpson pattern. So here was a historic stuff.
Good stuff. Sleek, we're not giving signals here. This is not a signal service. So follow your own strategies, guys. All right. Nuggets, I'm pretty sure you were the one saying sell gold now, weren't you? So really curious as to what you're seeing, because gold is going up. It ain't selling.
Yeah, that's
sorry, but
tending to run on. Yeah.
I look at, I called gold down here, right? So on my strategy, you stick it there and away you go. Right, now the next calling point is this one here. So it would have been a 10R. Right, so, just be careful what you see in the chat, guys, please. All right, please don't follow random comments in the chat. All right, don't follow our trades either, because these aren't meant to be signals, right? But just be careful. All right, let's just do that a bit better, so I'm not having to worry about the look of it. But that there would have been a really nice gold trade. That's right. That would have been a nice gold trade. Nice 10, almost 11R on that one. So yeah.
I feel like I'm so far behind on chat.
You and me both, mate. You and me both.
Thanks for love, Ahmed.
Love to hear it. Hamisi, I'd need to go in and dig this out. I'd need to go in and have a look. So if you give me a minute, I can go and try and dig that out. If LJ wants to bring up his screen, and I'll try and we can go and have a look at it for you, mate.
Oh yeah, I see what you're saying. Yep. Let me scroll down. Euro dollar again. We can go back to euro dollar if you want. I've touched on it a few times now. I think we've got a little bit lower of a movement. The test point's going to be this 117.20 I'm looking at for us to really find a base, and then potentially build a bit of support here and then run up. We're just getting a bit of a general retracement after such a heavy move up. It's been about 160 points the past 2 days. So to see that 35, 40 point drop, pullback, just slight mean reversion, pretty natural. 117.20 is one of those historic levels where for the past decade or more, we've had that as like a bit of an oscillator point between the 117.20, 117-ish area down to 114, and then 117 to 121, right? So there's a huge cluster of orders and block levels going way back through there. And it's a sort of a historical pinch point that institutions also look at for, which side of that band that we're on. So yeah, I'd wait coming a bit closer to New York to see if that can find its legs through here and then drive back up. We've got this series of, lower lows, lower lows, lower lows, lower highs, lower highs. However, this is just in a mean reversion within the larger, obviously, very much bullish trend overall. So it's not necessarily establishing a new downtrend. It's just chop throughout the day there. So keep an eye on 117.20, see if we can hold that. If not, you'll see a pretty clear run through. As far as that, you've only still got another sort of 10 points or so until you find another level of support. Then obviously beyond that, you've got that 117 round number and 116.90. So as far as the downside, there's probably a lot less downside than a potential rebound higher as far as euro dollar. So those are the levels you want to keep an eye on. Lawrence, oh god, got to catch up on all these comments. Sorry guys, we're getting through it all. Is there a few select pairs that I trade, or do I trade all majors and whatever looks good that day? So the majority of what I trade is probably euro dollar, Aussie dollar, NASDAQ, dollar yen, and then gold these days as the sort of top 5. That's sort of what I have majoritively traded over the past 10 years as well. Prior to that, the first sort of 3 years of my trading, I've been trading I traded a lot more indices, including like Australian indices, a bunch of stocks, futures and that kind of thing with gold, silver, and then transitioned a bit more heavily to FX. Those 5 is what I'd say I majoritively trade these days. There's ideas on things like the pound and that kind of stuff as well. However, normally they're kind of moving somewhat similar to, say, euro dollar or Aussie dollar. Euro dollar being the big boy as far as the dollar complex, and then the Aussie dollar gives its attributes as far as having the risk on, risk off, higher beta profile as far as currencies, and a slight window to Asia, being China, Japan, Korea are some of Australia's major trading partners. And you've also got the commodity complex there, which is attached to the Australian dollar. So it gives you a good sort of diversified or multivariant approach to express ideas based on whatever is happening in the market. And then that's just the asset you want to choose to express the ideas through. So that would be my majority trade these days. I'll also look at the other yen crosses or anything that's going on, whether it's euro pound or Aussie NZD, Aussie New Zealand dollar, anything like that as well. If there's opportunities, I'll scour everything else, dollar franc, all the rest. But that's the majority. So.
Yeah. Yeah, I mean, Nuggets, if this is true, then we don't want that kind of stuff in the chat, right? This is, in all seriousness, genuinely, this is a shared community that we want trade. We want everyone to succeed. We don't want to see people getting caught out one way or the other. And the reality is that anyone trading here is not going to be the kind of liquidity that you want for you to somehow get a better position. But
it's also not going to work. The currency markets are so massive that you could get every single retail trader out there, and you could maybe move, get everyone to do it at the same time. You maybe move price every single person at the same time. I don't know, 60, 70 pips in one blip, and then it'll get, returned. Retail traders make up like 5% of FX trades. So, and that's per the BIS, Bank of International Settlements data.
Yeah. Peter, if you're talking about the contests on the Fivers dashboard, that's the Fivers liquidity providers. It's the same market data, market analysts that you get on that, but it's not real. You're not trading the actual markets. It's simulation on the contest, right? So, but it's the same. As far as I know, it's the same data feed that the Fivers use.
Yeah. So you get the same data feed. It just doesn't get throughput to the market, obviously, because it's on for the contest. It's on a demo, obviously, because that's the the point of the contest, right?
Yeah. Exactly.
But you have the same data feed, same raw spreads, everything, with the Fivers through the contest.
Yeah. Just have a look. We've got a question about selling off on gold at 34.27.30. I wouldn't yet. If you are going to look for sells on gold, I would wait. I mean, you're coming into a pocket of potential directional change. There's a lot of orders that have been sat there. If you look on the 15-minute, for example. But yeah, I wouldn't be touching it otherwise. I want to come back to McGreedy's.
Hang on.
Click the wrong button there.
That's all good.
There we go. So McGreedy, this was McGreedy's GBP USD long setup. So correct me if I'm wrong, McGreedy, but I think you're looking at the 90-minute time frame. I mean, I can't see the actual time frame here, but it looks like each candle suggests an hour and a half later, 90 minutes later. So that's my understanding of what you're looking at. Pulling back down into the pocket area and looking for buys at around about 135, if I'm not mistaken, or 135.07, something like that. So I don't know if you want to, I'll keep this up on my chart, LJ, and I'll just go through what he's suggested. Those of you that don't know, if you don't know, the fivers within the dashboard have got trade talks, a specific section where you can talk about your trade ideas and share those trade ideas. So if you go in and have a look at that, you can find what other people are looking at, what other people are considering. The same in the fivers Discord as well. You can find that in there. But it looks as though he's looking at this from an ICT perspective. So price traded lower on Monday and Tuesday off the close of the week commencing 14th of July. Wednesday was the first green day, closing above Tuesday close. This also made the range in which price traded in on Thursday and Friday. Current week price action on Monday, price closed above Wednesday high, which also facilitated a break off from Friday's high. Anticipating price to continue to trade to higher highs with final target of 135.932 off the bounce of the fair value gap zone marked with the blue triangle, which is also close to the previous week high. So it looks like he's expecting us to pull back down and then push on higher again. What do you reckon, LJ? Have you got that on your chart?
I do, yep.
Swap over.
So I actually have a similar setup here. I'm just not sure if we'll get that deep of a pullback. Basically, I think these heads here, basically, right, that we had through Asia and then broke up through here through early London, now pulled back into the heads of them. So it's a break, retest, run. But I do have this 135.90 kind of area structured out. So similar to your trade right there. I just don't think we'll get that deep of a pullback. I think this was the pullback point at that 135.35 or so. And then we start to move up to 135.90. But overall, I agree with the trade. By and large, I think the reasoning is sound. Per the past couple of days price action, we've got a bit of ground to make up as well, probably from the overextended moves, from the capitulation that bled over from the gilt market into the currency market, and we're due for a bit of a correction with that. So it looks as though we may be starting that move now. This is on a 30-minute, so we go down to the 5. If we can keep building from here, then we start get rid of that. Then we really start running off that 135.9.
Henri's calling you out, saying your line looks straight.
It's too straight. needs more wobbles. Needs to be like this, like.
Exactly. Hamisi,
I'm getting better, guys. Getting better. With my
I'm telling you, for your birthday, I'm going to buy you one of those like digital pads that you have a stylus pen you can draw, use it as like a drawing mouse. Yeah. And then you can probably draw your artistic things, because at the moment you're just being held back by the mouse. I
can't use the mouse properly. I don't know how people do this on like Photoshop and stuff.
The artistry, the artistry is only going to go up a level when we manage to get you one of those drawing pads.
Precisely.
And Hamisi, no worries at all. Thank you for taking the time to log into the Trade Talks segment and sharing your trade idea with us. Very much appreciated.
Just jumping back to gold, just because when we were talking about it, I don't know, about 10 minutes, maybe 15 minutes ago now, this one, 34, 27, 28 level was the exact price I was saying that we got to drive up to and actually claim a foothold above here to then run on. So we've now pushed up to that, and the question is, can this then build from here, and then we get that drive higher above the recent highs?
I mean, if you look
that's what we're looking at.
Yeah, if you look at for example, the 15 minutes that just closed a minute ago, that closed quite strongly. So there wasn't any kind of wick rejection within that. So that suggests, again, same on the 5 minute, there was no real rejection there.
My feeling is you get a candle like that, and then another 15-minute candle like that, or it maybe pauses here first, the next one comes down, and then we drive up. So that's your kind of next 4 candles.
Yeah.
But
I mean, there's I think it was one of the guys was saying that they were looking at 3,451 as a target, and I would not disagree. 3,451 does look very good for buys as a target, because it is a perfect equal high on the 1 hour, and I think on the 2 hour as well. So it's a strong area for. Let me just pull it up. So back on mid-June, 16th, I think. Yeah, Monday the 16th of June. You see that there? So perfect equal highs, 2 1 hour candles separately, 2 2 hour candles separately, sitting there as perfect equal highs, suggesting that is a major area for price to come back and retest. We're slowly coming back up to that area, so it does seem reasonable. And if we look at how we've positioned ourselves on the 2 hour currently, we've taken the low and now looking for us to go higher again. So looks like a nice opportunity on that one. So if you did catch that long on gold, congratulations. If you're already taking profits, wise choice, but stick to your plan and trade what makes sense to you. So yeah.
29.44. Good to see you, buddy.
Good to see you, man. How you doing?
Back. Yeah. How we going?
Oliviera FX is saying, if I go into trade talks, look at people's trades, opening the opposite of them, I would be profitable since majority lose money in the long run. Not necessarily, because think about somebody who's going in there and sharing their trade ideas.
They're doing far more than a general person just
they're taking their exactly. They're taking their time to share their, they're doing analysis. Like, Hamisi took the time to outline his entire thought process for that trade idea. Now, whether it comes down there or not is irrelevant, but that gives you the idea of that somebody that's taken the time to sit down, do their analysis, share their analysis, and that's the key thing as well. Is they're putting their neck on the line, say, okay, here's my analysis, and see whether it plays out or not. So in a way, they're almost setting themselves up for accountability for somebody wider, right? So I wouldn't necessarily assume that, but either way, I wouldn't be trying to copy anybody else's trades, because they're not your trades. So you don't know their setup, you don't know their strategy, you don't know their risk. They don't know, whether they have trailing stops. You don't know whether they have, a certain point where they go break even, etc., etc., etc. Somebody's trade plan. Exactly. No, somebody's trade plan is going to be determined by so many different factors that isn't necessarily explained in one trade idea, right? So yeah.
Because by that logic, you could go look at any broker that shows, the aggregate of where traders are positioned, or look at MyFXbook or any other websites that have that kind of thing.
Exactly.
Go do it, trade against it, and you'll find you're completely in the bin, because that's an aggregation of people trading, the next day, the next week, the next month.
Yeah.
All those stats they don't denote what time frame, and so over this time frame it might be an L. Over that time frame it's a win. Over this one's a win, and then L. And then you'll get that constantly mixing and changing, right?
Yeah.
They're all aggregate numbers, right?
Yeah.
So you don't have clarity to the individuals.
Exactly. Try to fade me and see what happens. Exactly, Akram. Exactly. I would never dream of fading Akram whatsoever. One of our legendary OGs in the AlphaBeta Lab community. So yeah. LJ, conscious of time, we've got 10 minutes left of our segment. What else you?
I would say pound is continuing to drive up.
Mm-hmm.
I think we're starting to get that basing move, like I was talking about, and we're seeing similar in euro dollar as well here. It's this cluster between these 2 points, and then you've got these two just here. So anywhere within here, find that basing, and then the correlation between the other majors also running up. I think that's what you're looking here. for. So particularly when you go to 15, it starts to look a bit nicer. And this was somewhat similar even to the price action we had yesterday with some of these slight lower lows and slight drift down. Then we got the push up, another move back down with a fractional new low, which ended up being a fake out. And then we just drove right on from that. So today, I'm looking for a somewhat similar thing, not as much of a relentless, or it's not really relentless. I mean, we did make a fair few pips, but probably more of a drive back into the top of this area, about 117.45 or so, see how we play around there from here. But that's sort of the price action we've got today. Nothing major on the books, so tighter trading range overall, and so that's what I'd be seeing there. The Aussie dollar trade is now punched that 66 level, so it's near my stop here. I'd be happy to move that up beyond there to 66.10. I had 0.4% risk on there, so I probably will shift that up here, because you've got the cluster point here, which is around the previous highs, and you've got some wick points coming up to 66 just here. So it's a question of where you stop in that vicinity. We're already up 0.7% now on the Aussie dollar. Given we're going to New York, that's quite an extension of the ATR, given no other catalyst piece that has driven price today. So at some point you'll see a move back down. With that commensurately, I'd still look for a TP here, see if we get a further drive into New York and come down, sort of retrace almost the entire day's gains, just about. So get one of those all the way up, all the way down type moves. It's kind of what I'm looking for. We go over to dollar yen. Dollar yen is still punching on. So we're now heading down for this 145.80 level. My shorts were in up here, so I'm still sitting in this as well. And so I'm looking for down here as a trade. So I've got that sat in there. The other cross trades with the Aussie dollar, the euro dollar, and then some NASDAQ trades. And then they're also slightly balancing each other out per whatever capitulation comes through New York open, and then they should counterplay against each other as well.
Henri's called out Akram. They're going to make their own competition, but they don't want you involved because it's going to be unfair. I don't know what you're talking about. What are you afraid of, Akram? Come on. LJ's not invincible, is he? Oh dear.
I wish I was invincible. That'd be pretty cool.
Exactly. I don't have the details of the giveaway, Antonio, but winners, as far as I'm aware, will be contacted anyway, because you have to register with your email address and stuff. So if you are winning, then as long as you've entered, then you'll be notified. So no worries. So Henri was saying I'll take him up on his trying to fade him and saying is he long in Aussie US dollar. So there you go.
NASDAQ's about the same, what we were looking at before, and then that's going to go for the other indices as well. S&P, the Dow, they're all basically the same basket. So
guys, 5 minutes left of our segment before we hand over to our colleagues back from the live trading room. We've got Dirk joining us with a new member of the team called Derry, a new guest. So Dirk will be joining us in a few minutes. So if there's anything you want us to look at in particular, then let us know, and we'll pull it up in the last 5 minutes. Otherwise, you'll have the pleasure of Dirk's company along with Derry as well as a special guest. So let us know, guys. Otherwise, anything that you're closing off on, LJ, for the rest of the day?
Well, I was going to say euro dollar seems to be finding that base. Euro yen here has made a double bottom. Okay, so I was going to look at your euro AUD trade.
Honorary wants you to look at
Pepe. Where are we on the 4 hour? I mean, this still looks very unhealthy, I will say, right? But as far as today's movement, I think we might be finding a point where you could find that small reversal trade on Euro Aussie, Mike. I know you've already made what you need to do for today, so you don't have to take any more trades, but you can take a hypothetical paper trade and see how it goes.
Not doing it, nope, because then I'm going to want to do a real one. Nope.
But yeah, I mean, it's been getting crushed all day, right? And we were looking at Aussie dollar. It's sort of, we'll be looking at topping out at some point. And the euro strength seems to be starting to find a bottom. So fair shot there. You might find a bit of a retrace. Not heaps, but Euro Aussie is something that moves quite a few points. More illiquid, just remember that, of course, beyond anything else. So, final looks at other tangential stuff. Oil doing much of nothing, still wafting off. Down to these lower 60s. I think spoke about, what's that? 2 weeks ago now. We're gradually just grinding down there. That's pretty to be expected. This is that level on the DXY as far as the near-term price action for today's session that we've formed. We've kind of come under this the trend line that was formed from this is towards the end of New York, roll over here, Asian session, early London, broke right through. We've now chopped around late London, testing the underside a number of times. And so I'd be looking at that as an indicator for the dollar complex as well. Punch back through here, we might get another drive higher, and then that would invalidate or roll over the other euro dollar, pound dollar, etc. Trades in the dollar yen. But right now, this is still looking, again, pretty soggy, but not much momentum either way. It's a bit of chop and consolidation down here right now.
Good stuff. We got Dirk joining in a minute, and we've also got Derry as well, as I said, a guest joining Dirk in a couple of minutes. Other than that, guys, keep on trading. Ahmed's looking at oil very quickly. I don't know if you want to pull up just for a second. John, we've been looking at gold for the last 4 hours. If you didn't catch those buys, I'd go back to bed, mate. Looks like we're going long.
So oil, we've got this sort of general sort of wedge type thing forming through here. Prices just gradually moving lower in a skew in a slightly tighter and tighter range, lower. Overall, as far as production, we had the little scare that was going back up here with Iran and everything going on. We then came back off after that got sorted out. From there, Russia wants to pump more oil, the Saudis want to pump more oil, so You've got a general increase in volume coming onto the market. They've been wanting to for a while, just haven't done it quite yet, but there's still just at some point they'll actually punch the throttle on pushing that down. So the general outlook for oil is still lower, and I'd be looking back towards the $60 mark overall, and I think it'll just be a gradual whittle down. Not much big news as far as the oil market right now.
Got you. Alrighty, well, listen, guys, we've also got Deanna Cole as well. Dr. Deanna Cole in with Dirk for the next segment. So that is it from myself and LJ for today. You can join us over on our live stream over on our YouTube tomorrow morning, 8 a.m. UK time. Otherwise, we will see you again tomorrow. Thanks as much, and see you next time.
Indeed.
Cheers, guys.
Thank you, guys. See ya.
And here we are. How's everybody doing? Hello, hello.
Hello, Dirk. How are you?
Dina, good to see you. I'm very well. How are you?
I'm doing well. Thank you.
Nice. Yeah, I heard through the grapevine that we are going to have another guest today, a new face that is probably going to be, from my understanding, more often with us now. I don't know when he or she is going to join us, but for sure, looking forward to that. The more traders, the more merrier, I think. What do we have here on right now? Oh, I see a lot of the usual faces that have joined us here. A bit awkward for me. I think I've never been on the afternoon session before. Are we the last ones, by the way? Or still somebody coming after us? Do you know that?
I don't know. I don't know if maybe Victor might be coming in, or Jonatan. I'm not sure. Good to see everybody in the chat, though. I see a lot of familiar faces, like you said. Good to have everybody here.
Absolutely.
And I haven't streamed with you for a while now, Dirk.
Yeah, so, I was just also thinking, like, when was the last time? I think it was together with Victor, no? But that must have been like
it's been a bit. I'm not sure. Yeah.
Pretty long time. So let me my chart ready here. You've been trading anything today, Diana?
I was trading. I've been trading the indices, so ES specifically, S&P futures. Price just barely tapped into all-time highs, so it's been a interesting time in the indices. So that's mainly what I've been focused on, and then a little bit looking at gold, still kind of waiting. But today, just indices so far, just the S&P.
Today, just indices. I was trading, or want to trade today as well, the NASDAQ and gold. But first, I have to share some good news. I just need to find the right window for that. Give me a second. I think this one here. So yesterday, I finally passed my evaluation phase with a high stakes gold trading account.
Yay! Congratulations!
Thank you. The trading account where I only trade gold that you guys in the audience forced me to trade. So that one started I think 3 months ago, and I went through some up and downs with it. Actually passed it yesterday by accident, because yesterday was the start of me automating the whole strategy, and this last bump to the upside there was a mistake, because I didn't take into account. And I'm sharing this because this is a very common mistake that happens often, but can be very costly, that the lot size for gold on the fivers is 100 ounces. So I traded, I wanted to have a risk on the trade of 0.25%, but because of this mistake, ended up taking 25% risk. And luckily I saw it immediately, and lucky it ticked into the right direction. So yeah, that one a little bit of a hiccup. Usually when something like this happens, the hiccup is going against you. I was lucky yesterday. So I'm now in stage 2 of the evaluation, a new account, and have to reach another target of 1,000 US dollars to get this into funding. As I said, and I've been talking, I'm sharing this now because I talked a lot about this in the last weeks, really. I finally have everything automated. It's running now on a separate VPS server where I can where I don't need to manually trade it anymore and sit in front of my screens for extended hours and then be angry at myself because I missed too many trades again.
Well, congratulations. That's a beautiful equity curve. And I assume that was a long trade in gold yesterday. It was a great day to make a mistake.
It was a mistake into the direction of a trend. But that's automatically because it's a trend following system. Let me quickly switch over to your, if you allow me, while I... your screen offline? I still need to find my way around here with this software.
There, it might be added. No? Uh-oh. Maybe we're doing something wrong here.
Hold on. Here's my chart, but if we switch over to you, where is it? Where are you? I don't know. I have no idea what I'm doing here. This should be you,
right. It's. I can see it on my end.
Yeah, but how come it's not there?
Can I do this? Okay, no, that's a spotlight. That's not what we're looking for. No. Well, there we go. Anyway, we can talk about, tell us about your, so what you had up on the screen, your chart, is that, it's a little hard for me to see, but is that the, I forget what they're called, point and figure? Is that the right?
No, this is the Renko chart. So, yeah, every, actually, it's a type of chart that I really, really love, but I haven't used in a while, at least for short-term trading. It's basically a time-independent chart, so just displays price movements. For example, here for gold, I have a brick side of $3. So when gold moves up by $3 from the last high, then you'll have a green box added, which was the case just now. And if gold then would move down by $6, you would get a red box underneath, independent from how long it takes. So if the next move of +3 or -3 or -$6 is like tomorrow morning or whatever, then the next box would be drawn. And the beauty of this is, I think it works wonderfully for trend following system because it filters out all the noise that we sometimes have to deal with, you know, when you're on the 5-minute candles, when you're on the 1-minute candles, or even 15-minute or 30-minute candles. You often have this effect that you have prolonged times where really nothing happens, and which, you actually would like to take out of the equation, especially when you're trend following, especially also if you're working with something like moving averages, because these are always the times where those give you a lot of wrong signals. From my experience at least. So I was looking for something to filter that out, and well, I came back to Renko charts as the solution, and it has been really working wonderfully. So every green dot is a long entry from my system, a signal. Every red dot is a short entry, and it really just follows or tries to follow the trend based on momentum factors, which I derive from moving averages. So I measure the slope, the angle of how those moving averages work, plus price action.
Okay.
Yeah.
That's interesting. So it looks like, well, a couple things. One, it looks very similar. It looks different, but it's the same concept as range bars. Then it sounds like where time is removed.
Yeah.
Okay, that's something that I use, but it looks different. So that's a great thing to be using, I think, especially if you're trying to be a trend trader and you want to get on, follow the trend, get in with the trend. That's a great way to sort of filter out the noise of time, right? Because time can look pretty messy on the chart.
Exactly. Yeah. Now we still need to find out how to edit your chart.
I know, and it looks weird now. Here, I'll remove it from there. But, one other question is, it looks like you get signals pretty often. I can't see what time range that is. That's a couple days, right? What we're looking at is a couple days.
So this structure, for example, here, this is the 22nd to the 23rd.
Okay.
Yeah, really depends. No, if the market is not moving at all, you sometimes can get very cramped days. But since I have a rather low brick size of $3 at these prices, I mean, that's not much for gold anymore. You tend to get more signals. The challenge really is to find a balance between getting signals every now and then and not getting too many signals. So if I would reduce, for example, here now the block size to $1 instead of 3, you would immediately see you would get many more signals.
And can you explain what you mean by block size? That's related.
It's like one of those bricks, like this red brick, for example, is $1. So that brick started at 3,429 until 3,428. If now we would see a price of 3,427, a new red brick would be forming. We would get the next price somewhere at 3,430. A green brick would form there.
Interesting. So I'm guessing you must have different bricks for every asset that you're looking at.
Yeah.
So how do you?
For example, on NASDAQ, I have $10 bricks. On the S&P 500, I have $2 bricks. On Bitcoin, I have $100 bricks. Euro dollar, I'm not actively trading there yet because I haven't really found the edge there. Honestly speaking, the system is working, but it produces with good risk settings something like 3 or 4% per year, which is not enough because a buy and hold strategy, for example, in the S&P 500 will give you 8%. So you always need to be somewhere above what not the risk-free return is, but I mean, if we look at the S&P 500, those 8% are the average return that we've seen over, I think, the past 80 years, if I'm not completely wrong.
Interesting. What about, how do you, a lot of times when you're starting out with a system, it's really hard to know how to set your stop and your take profit. Do you use a take profit first of all? Okay. Can you tell us about how you do it? Like, it looks like you're taking level to level, or like pretty quickly taking profit.
Yeah, it is. So this system on gold works with a $6 profit target and a $3 stop loss. So if the trade goes against you just $3, you're out immediately. If it goes for you, you have a risk reward of 2 to 1. Or let's say like 1.9 to 1, because there's spread and commission, of course, involved as well. And you have a success rate with this of historically of 58%. So with these risk settings, you are very well off. I experimented a lot. So on some assets, I trade the strategy, for example, with trailing stop losses. On Bitcoin, for example, I have 15 bricks of a trailing stop loss. And that automatically adjusts every time the price moves $100 higher and stays there then. And there, this works better. Trailing stops on gold, for whatever reason, I don't know why, do not work well. So when it comes to risk management, this is something I back-tested. And I didn't like optimize the system itself. So the rules for entry and exit, or when a long and short signal appears, are set in stone, so to say. The only thing that I optimized on historic data is the risk settings. So that would be something like target $6, I have a stop loss at $3. And yeah, because otherwise, if you modify like the entry rules and like optimize them, then you're very quickly at a level where you do curve fitting, and then it looks very beautiful in the past, but it's not going to earn you money in the future.
That was when I tried with algos and tried to set stuff up and back test automatically. That was the hardest aspect for me to figure out, where is the line between curve fitting and optimizing.
Yeah. I mean, you can always do like Monte Carlo simulations, or you split your data like in 3 segments, one for training actually, or finding good settings, then one where those certain settings are tested on, and one last patch of data that the system never has seen before. You can get relevant results, but you can only do that for assets where you really have a lot of data. And I mean, if you are working like on something like 5-minute candles or 1-minute candles, TradingView, for example, only provides you with so much data. You're not going to get like for euro dollar like 10 years of 1-minute candles. You can, but you have to pay for that, and that quickly is quite a high bill to pay.
And it takes a long time to analyze all of that information too. So that's really interesting, though. I love that you shared about the 2 to 1, because I think, and maybe this is my background coming into it, my bias coming into it is always thinking in terms, naturally I find myself thinking in terms of higher risk reward. but forgetting, not truly forgetting, but forgetting that means not only that your win rate is going to be lower, but your equity curve is not going to look anything like what you showed. I mean, your equity curve is as smooth as can be.
Yeah, but you have to take into account that for a long time I was trading that manual as well. Mm-hmm. So the proof of that the system can survive on its own is coming now. Nothing guarantees, of course, that this is going to continue like a started before. In that equity turf, there was a lot of testing of different settings, of different risk management, until I once again came to the point that when it comes to being disciplined about my risk, I'm very much an amateur still at those short-term trading systems. So I'm very fast to manually pull the trigger and get stopped out too early or take my profits too early. That's why it's so important, for me to have this automated, to take myself out of the equation, basically. I'm good at maybe at designing systems like this. I'm not good at manually trading them, honestly speaking.
So did you write this algorithm yourself?
Yes.
And in MT5, or did you write it somewhere else and then move it to MT5?
Yeah, that was created in Python, and then I translated some of at least the stuff that was translatable to PineScript for TradingView. And now I have a VPS server where 2 instances of the Fiverr's MT5 are running, one bootcamp account and this high stakes account. And whenever there's an alert triggered on TradingView, it sends a webhook to that server through a software called Pine Connector that translates this into what MT5 can understand, basically.
Interesting. So it's complicated.
It is complicated, yeah, but it's possible. And the beauty of it is, I think nowadays everybody can design something like this. I'm not saying it's like easy, but with the help, for example, of something like ChatGPT, on my case, I like to use Claude because it's better at coding. So it can help me with a lot of redundant coding tasks that go into this, where I just don't want to spend like hours doing that myself anymore. But you can use that also, and we did that actually a couple of weeks ago, to design your own trading system. Just throw a bunch of indicators just for a start, on the chart, download the data up here, export chart data, feed it into ChatGPT or whatever you are using, ask it, hey, can you analyze this CSV file for me? Then it would tell you something about this. And then ask us something, hey, can you find with all these indicators, I put a trading edge for me? And you'd be surprised sometimes by the results, really. It's not going to design you like a state-of-the-art trading system, but it's an idea, and all of these things just 3 to 5 years ago, you had to do manually. It was very, very time consuming. And now you can do it like once you have your routine set up within like 15 to 20 minutes. It's amazing.
Yeah, that is amazing. Do you turn it off at all, or do you just let it run?
No, now I'm going to let it run.
Okay.
The only thing I'm thinking about still is that, for example, I do a cutoff like at maybe 15 minutes to midnight on Friday night, so I don't hold positions over the weekend, because that could very much screw up your risk management very fast, especially in something like gold and NASDAQ.
Right. Absolutely. Well, let's go ahead and look at the chart if we can. I don't think I can add it still. No. Are you able to add?
Let me see if now I have to. If we add this one to scene, it's going up there. No, How is that done? But we can if we. What I'm wondering is that.
No, I can only spotlight it.
Gone.
That's not what we mean.
So this should be like your screen, and if we add this now here.
Can you see my screen, Dirk?
Yeah, I can see your screen below us, but not in here. And I also don't want to click just on something later. We are completely gone. So, but I of course volunteer to be your assistant if you.
Sure, absolutely.
If you tell me what to show.
Yeah, let's start. It looks like NASDAQ was the most recent one. So let's take a look at NASDAQ, and I will look through on my chart. And this is NASDAQ futures that I'm looking at. So that's NQ, if the numbers sound a little different, look a little different, the price action should be very similar, but it may just look a little bit different than the numbers that listeners might be used to. And what I'm looking at on the NASDAQ is we're not seeing it quite yet on the NASDAQ, but on the S&P, we just barely tapped into a new all-time high by about a tick. It popped over and then dropped back below, but kind of dropped back below in a little, I would call it a controlled, a controlled sense. The NASDAQ and the S&P are looking a little bit different because on Monday, the NASDAQ went to all-time highs, and S&P also went to all-time highs. But again, today, the S&P is right back up at all-time highs, and NASDAQ is just a little bit below. So as far as looking, I'm not sure if Cool Traders is looking for, to go long or short, but this is where I'm at. Price is right, I would say it's inside the range from yesterday. So yesterday there was a huge move down and price has just been sort of consolidating within that range. There was some bullishness to it though yesterday. I would say one, because it's at all-time highs or just below all-time highs, but also was a fairly bullish close yesterday looking at the daily chart. So on the daily chart, price dipped below the prior day lows, just like we saw on the S&P, but then pushed higher and actually closed above the previous day low. So even though it was kind of nasty price action, ultimately it kind of knocked out all that liquidity and then pushed higher. So far today, price is still in kind of a tight range within yesterday's daily range, but is sort of slowly trending higher. So to me, this is not something that I would consider shorting at all, even though we're at the all-time highs or near all-time highs again. That was pretty bullish price action, what happened yesterday on the daily chart. So I would be real careful with that. As far as longs, price is a little bit extended inside that range. So it's hard to describe without having the chart up there. But basically, I would wait to get long if you're not already. I would wait for some type of pullback, either in the hourly or the daily time frame that gives you sort of a better spot to get long. And price is pulling back on the hourly right now, and so maybe you could justify it. But let's switch over to the S&P because it's a little bit different. So this on the S&P we see kind of similar, but the S&P is a little bit stronger. So specifically, if you're looking at the daily chart, you can see prices just below the all-time high. And when this happened before, looking back to a couple days back, we went to all-time highs and just barely popped above.
You can see our chart, by the way, now.
Oh, great. Yeah. Okay, perfect.
Thank you, Mike and LJ, for helping us.
Great. Thanks, Mike and LJ. Okay, so looking at the S&P on the daily chart then, here's what I'm looking at. S&P. This was the all-time high, when price went above that level, looking super bullish, and then came back inside this little triangle area. Same thing here. This one was pretty nasty. It went above and just absolutely crumbled from the, price just crumbled that day. We saw a little peak above again, all-time highs again, but it just kind of sank back in. Same here. So we're seeing a lot of poking above and coming back in. For me, this isn't something that I would want to short because at some point there's a good chance that price could just rocket ship through the all-time highs and we could see, a much stronger close higher. We haven't really seen that yet, at least in this area. So not an area I'd want to short. And honestly, it's a little bit too late, in my opinion. Maybe your assessment is different. If it's a longer term hold, I'd be willing to buy here, but I think most people in the chat are probably kind of, shorter term or maybe even day traders. But this is price action I really like to see here. So we talked about this a lot. when price dips below prior day lows, so here it dipped below prior day lows, which was also a swing low, and this was a swing low, and then reversed higher. So it closed above this low, or sorry, the swing low and this prior day low. That's really, really bullish, and it can be a launch, right? So where price will go higher, and in fact, that's what we saw. So not only did price close a lot higher that day, but the next day as well. Then we got consolidation, kind of messy price action. But again, yesterday we got the same thing. So price dipped below the previous day low and actually the low before it, the daily low before it, and then absolutely launched higher. So to me, I'm looking for continuation to the upside. Whether or not it fits in your strategy to take a long here, that's up to you. Certainly not something that I'd want to be shorting, but as history would show us, that's not everybody. Some people are shorting this, and that's the trade they take, and you can see that it has worked well for them over and over again. So I'm long the S&P, and I'm just sitting tight for now, and we'll see what happens.
I have to activate my microphone as well. May I ask you? I'm seeing on the top right of your chart these colored green bands from like gray to dark green. That looks very interesting. What is that?
So it's it's probably a lot less. I don't know what the word I'm looking for. It's not as interesting as maybe it looks. I have a tendency to be fairly aggressive. A little too aggressive, and I have a tendency when things are going great to be really, aggressive about it. And so I will continue to buy. Like, for example, this move here, this is a really, really strong move. And for me, I'm buying way too high up into this area without letting price kind of rest for a little bit. And so what I'm looking to do is kind of just a visual. I'm a very visual person. I need visual reminders like, hey, slow down. I know it's a party right now, but just remember, it will end, right? And it'll be normal. So when the move ends and pulls back, that's a monster move from where it was there. Okay, I didn't quite line that up correctly, but that's almost 60 points. I don't know about you, but I don't use 60-point stop losses. So this was a move that, was where I needed a reminder like, hey, chill out. This isn't really the time to be super aggressive. Now, yesterday was the time to be aggressive for me. Again, this is just what I do and how I think about the market. Yesterday was the time to be super aggressive because this is a super, super bullish, marker. Basically, when price goes below the previous day low, that's like a really good sign to get long. It goes below the previous day low and recovers. That's what we're looking for. And so, anywhere in this like dark green zone would be, I could, be more aggressive if I wanted to, just go in without. I don't like to catch falling knives, but at some point, if it kind of looked like, okay, the knife drop has kind of slowed or whatever, this would be a zone maybe where you could be aggressive, a little less aggressive here, definitely less aggressive here, but still not like a no-go zone. And then once we get above, I really want to just be chill. And I need visual reminders for that.
That's good. I mean, that is a very good example, of helping yourself,
right.
of finding the right tool to help yourself. Now, if you don't mind me asking, like for trade entries like this, so if you, for example, see the price now pulling back into one of the lower green zones, are you then looking for price action? Or do you have like a dedicated system that tells you now's the time to enter? Or are you more of a trader who doesn't use price action, who kind of goes with the feel, which is of course also valid. I also know some people that are very successful with doing something like this.
Yep. I try to use both. So I have two kind of styles that I use, and I have two kind of hold times that I use. So kind of a day trading, really quick in, quick out, and swing trading, kind of level things out. I also have an automated way that I manually trade. So it is an automated, kind of like red light, green light, but I manually push the button still, working on getting that fully automated. For me, I'm already positioned, and so this trade is already, it's kind of like just sit back. The work is done, and now I'm just waiting on, how far it's going to go. So this is really kind of a way to position ahead of the move. In high probability trades, position ahead of the move, and then you have to really just be hands off now. So, that is what I was doing wrong here. So when this move lasted 1, 2, 3, 4 days, right, it was easy to say, okay, well, this move's going to last forever, right? It doesn't look like that, but we get in our head as traders, not that we actually literally think that, but it feels that way, right? And so for now, it's time to let this move play out and then wait for the next previous day low to price to move below and then recover.
Interesting. And in terms of risk management, how's your approach there?
How's my what?
Your approach when it comes to risk management?
So I typically, again, I kind of split it. So I mostly will take profit pretty quickly, like not as quick as you said, but I'll try to take it pretty quickly and then leave some on to run. So, take off the majority in a level so I can keep my stop where it is, reduce the risk. At some point, maybe I can increase or, lessen my stop, my money at risk. And then sometimes I use I call it a filler kill strategy, like what you were describing, where it's either going to go to your take profit or it's going to go to your stop loss. So I kind of have, a couple ways that I do it in order to sort of diversify, because I only trade typically the indices and gold for now. So I diversify in other ways.
Yeah, I think, in general, like the thing when I started out looking more into like day trading again, and so to diversify a little bit away from my long-term investing, I also very quickly ended up that I thought like, I can look at 15 or 20 assets at the same time. But then especially also when watching Victor trading, for example, I noticed like it's really better to concentrate maybe on 1, 2, or 3 assets. I think especially if you're a beginner, because otherwise we tend to oversee things. And I think it's more important to kind of understand and get a feeling for the asset that you're trying to trade, especially if it's something like euro dollar. And when we look at Forex, well, not only at Forex, I think this can be translated also to indices and also to cryptocurrencies. You kind of see them always moving into the same direction. When we have indices that go up, usually we'll see a weaker US dollar. Also, so the typical risk on moves, usually we will see gold going down. At the moment, this for the past years, this has completely flipped now. So that's not true anymore. But it kind of moves into one direction. Then I always ask myself, if I have a trade in euro dollar, do I still need the trade in euro Aussie or pound sterling dollar or something like this, when in reality, everything can be traced back to, for example, very often euro dollar, pound sterling dollar, dollar yen. So basically the major currency pairs. So I'm not a big fan of looking at something like, I don't know, pound sterling, but maybe that one you can, maybe Indonesian rupiah versus the Hong Kong dollar or something like this. I think it's extremely hard to find an edge there, because those moves are always a bit derived from what is going on in the major pairs. And I see that also. I get the question very often asked, for example, Dirk, you're a German, do you trade the DAX? And I always say, no, I don't trade the DAX. Why don't I trade the DAX? Because as soon as the US futures gain liquidity throughout the day, the DAX is just copying what the S&P 500 and the NASDAQ, primarily the S&P 500, is doing. Now, somebody told me the other day, well, that's
a cheat sheet.
Yeah, but you cannot exploit that really. We're not fast enough for doing something like this. The arbitrage is done by computer mainframes probably somewhere. But there again, I rather trade the asset that is causing the other assets to follow than the asset that is following something else. At least maybe it's an illusion. My illusion is I have more control than.
I don't think it is an illusion, and you don't have control of the market, but you have control over what you do and what you look at. And I think that's one of the fallacies. I know for me, that's one of the fallacies that I fell into when I first started trading prop firms. I thought I was doing my homework better or being like a better trader if I knew all of the pairs, right? So I'm looking at all 28 pairs, feeling like I'm very diligent and doing the right thing, right? I really wanted to be a serious trader. And the reality is, boy, that just made it way harder and unnecessarily difficult. Yeah. And if you think about it, like when people talk, if you ever talk to like an old school futures trader in the pit, they specialized in a pit. They either traded hogs or oil or, the NASDAQ, whatever. So I think that for some reason, we have a tendency to think that more is better when it comes to trading, that we should know all of the things, and we're reluctant to specialize. And I think, it's something to think about, especially if you're struggling and new.
Yeah, you don't want to make your life even more difficult than trading, especially in the beginning is. Anyway, it's, yeah. I went through that notion now for the last 3 months again, when the audience asked me, hey, you should trade gold, because I was an idiot back then and told them I am really not good at trading gold. So of course they elected me to trade gold. Mm-hmm. But I went through kind of the same experiences again that also people who are at the very start of their career are, all those self-doubt. Yeah, at first I try to translate my long-term strategy into a scalping strategy, which is a strategy where I try to pick bottoms and tops. I mean, that's what you do with fundamental analysis. Yeah, you want to buy when nobody else wants to buy, of course, when the economy is in shambles. And but this is very hard as a day trading strategy to be the contrarian, especially in an asset like gold, because with these crazy spikes we sometimes get to the upside and downside on the candles. So I had to modify it into a trend following system, and then I really went through all this doubt, went through, is this really going to work? Is this worth my time? I cannot do this. it works, and it's like the whole process of what might take a total bloody beginner maybe 1 or 2 years compressed into 3 months.
Absolutely.
But it's nice. It kind of gives you an understanding again what probably a lot of people that are watching us streaming go through, especially on a psychological level.
Right. Yeah, it's true. I think a lot of the things, I always kind of lament that one of the hardest things about being a do-it-yourself trader is that you don't like for example, jobs that I've had where I've shown up and there has been somebody to show you where things are and take you to the cafeteria or help you when you have these minor or major problems. There's somebody to always be there to kind of just give you a little bit of advice or even just commiserate when things are tough for everybody. I think that's one of the really nice things about streaming, to have this platform where it's not two-way fully, but hopefully it's two-way enough that people can ask questions and know, I'll be honest, there are things that I do wrong. I know you mentioned, Dirk, earlier, it is really hard to just push the button at the right time if you're the one pushing it. So there are all these things that we struggle with as traders, and I think traders tend to feel like they're alone. And I think it's really important to know that we all have those things and we struggle with them on different levels. They're not always the same.
And sharing is caring, no? I mean, you can do that. You could say now Dirk has been doing this for 26 years already, not like scalping and stuff like this for the majority of the time, but on the financial markets. But there's still everyday things that you can learn, and sharing, especially also sharing your the mistakes that you made are super, super important. This is, for example, what I always like about Jonatan a lot. He's not shy talking about the mistakes he has. Right. And I think this is something you need to learn as a trader. And I do my comparison that I like to do here again. This is to some aspect, at least, where traders are like the top athletes. So really the pros in tennis or golf or whatever, where they are, where the only thing that differentiates them from very good amateurs is really the mental game.
Right.
That they are able to do the same, exactly the same that they practice if they are watched by millions of people. If it's a make or break situation, if you hold this putt, you're going to win $10 million. If you miss it, you're only getting $1 million. Nice problem to have, of course.
Yes.
But I hope you understand my what I mean with this.
It's a perfect analogy. It really is. I love like performance psychology documentaries. I'm a huge, I'm not like a huge sports fan, but I love documentaries where they talk about specifically like golfers, tennis players, and probably one of my favorites, but it's very small, is hockey goalies or goalies in general, right?
Okay.
To be a goalie is such it's so similar to trading in so many ways. Don't you think? Sorry. Because you lose a lot, right? A lot of the goals or a lot of the shots on you you're gonna miss. You're gonna fumble. You're gonna, they're gonna go your way sometimes, and they're not gonna go your way other times, and that can be despite your best effort. So I think that's really important to think about. So let's take a look at gold real quick here. So I saw somebody asked about gold, and let me see, kind of messy in gold lately. So probably people that are here when I'm on stream know I love gold. I love trading gold. I love these moves in gold and even these moves in gold because gold has a tendency to continue, right? So once it starts a downtrend, there's a tendency to continue, and that's kind of really clean price action. Trading is never easy, but sometimes gold makes it relatively easier, right? To get in a trend and really follow it. Again, taking profit, most of your profit very early, and then leaving a runner. And then boy, can gold make it easy for you sometimes, right? Not all the time, but sometimes. But since about April, it hasn't been the case. It's been very sloppy, very messy. I was trading all throughout here and thinking, boy, this is really difficult. And so as time went on, Victor and I kind of said, oh, look at that. It looks like a cup.
Yeah.
A messy cup. And then time continued, and it, we kind of said, oh, look, it's starting up here. We were like, oh, look, it's starting to look like a handle. And then boy, it just, basically painted the most perfect handle for us. So this isn't necessarily a pattern that I trade, but it is a good indication that this is just a messy consolidation and I need to take a break and sit out for a bit. So for the most part, I have been either really light on gold, holding gold for longer term, or longer positions, or very light. It's starting to get more interesting here. So we had talked about, okay, if this is actually a cup with handle, a traditional entry point would be above the handle's high. We're starting to get there now. It seems like it took forever for that to happen, but we are starting to progress toward that handle's high. And recently price action has been a little bit cleaner. So if we're talking about that same thing that we've been talking about, where price takes out the previous day low, maybe a swing low in there, and then that can be a really great entry to see price to enter in a high probability entry and then wait for price to push higher. And gold has delivered lately. So we saw this one here, we saw this one here, and then most recently this one here. So price moved below the previous day low, closed higher, right? So anywhere kind of in this area is where I would be interested in getting long. So you even had kind of a shot at it. If you set a limit order, maybe you could have gotten in on a limit order, and then price just went, what seems like to the moon. So the important thing here, though, is I think, Dirk, you kind of asked along these lines, okay, so what do you do now? And the answer is just wait for me. So I'm waiting now. We talked about these blue lines, by the way, are previous day highs, and we were watching as gold was pushing above it and staying above it, closing above it. Here's a swing high. Now I'm waiting for price to form a daily candle and then take out the previous day low. So for example, right now, gold would have to come down here. So that's a pretty large move to be looking for. So for the most part, ride your winners for now. And then when you can get a move below a previous stick low and price comes back up, right? So the thing about this little zone here is that price went below, but then it came back up. So I guess you could buy here, down here somewhere, but very light, right? This is a high probability entry. This is, could be a lower probability entry. This is high probability. That's the move that I'm looking for. And, like you said, we don't always do it right, but that is what I'm looking for on gold. So just waiting now.
Could the alternative maybe be, because it's really a very beautiful cup and handle pattern. I haven't seen that, I haven't noticed that before. Could the alternative maybe be that we have a scenario here where it makes sense to work with a stop buy order above the all-time high? So you want to see the confirmation of a breakout to the north and then enter, and then you could put your stop loss underneath the last all-time high. Shortly. I know it's like a bit. People always, when I talk about stop buy order, say, well, why not buy immediately then? Yeah, because you want to wait for the confirmation. So as an alternative, what is really interesting, Diana, is you said sit and wait a bit. I talked about this on Monday about gold and said gold has the tendency always to form these areas of compression. You get a move to the upside, and then gold goes into this consolidation. I always call this compression pattern because the pressure goes up and up and up. So eventually it has to release the pressure. And this is usually when you get volatility squeezes to the upside or downside. Now, the last 4 times when we were in areas of compressions like this, the squeeze was always to the upside. And by the looks of it, it's just crudely drawn, of course, just to visualize things here, of course. But for the moment, it really looks like this compression is going to resolve itself again to the upside. Right. So us going into the area of 3,550, 3,600 maybe, which I think here Born would absolutely love to see, right? Let's push gold to a new all-time high. I bet you're long gold.
Yes. Born in 2944 has been long gold. I think yesterday was a 17% gain or something like that. So has really, really bullish gold still, I believe. So,
definitely the right side of the market when you got to ride it until not anymore. And I think really for the total market structure to change, we would actually have to see a new lower low, which would probably be somewhere in the area of 3,100. This is also a long way to go, but I don't see why this market structure, at least if we look long term at the chart, would break if this doesn't happen. So for the moment, still bullish gold. Doesn't mean that we're not going to get consolidations again. For what it's worth, you can be long gold, lose money, right? If you make the mistake and enter here and then ride it all the way down here. That was a move of 11% as well, which is a lot for a legacy asset, for one of the assets with probably that has next to US stocks and euro dollar or forex in general, the highest liquidity there is in the market. I know you said you trade the gold futures, right?
Yes.
Is there I bet there's a lot of liquidity, no?
Yeah, I've never had any issues with liquidity in gold futures at all. Yeah.
Was the thing that always amazed me when I was still an option traders for a family office, and sometimes you had this, for example, in euro dollar large amounts that you had to trade something like 30 or 50 million in one stretch, and it didn't move the market at all. No, you would expect oh my God, I'm driving the price up by 5 or 10 pips. Nothing. It just absorbs it up. This insane amount of liquidity that is in the market.
Yeah, that's right. We're just little specks, right?
We are just little specks.
Well, and to your point, that's a buy stop is not a strategy that I use, but that is a totally valid, that's a valid way to do it. And just because gold is kind of had a rocket ship doesn't mean necessarily that you've missed the move. A trader has missed the move because, like you said, gold pushes up, it consolidates, and then pushes up, consolidates. Not perfectly, right? There are some pretty nasty down moves in gold as well. But if you look at the hourly chart, so on the daily, we've had 2, maybe 3 days of, rocket ship launching, right? So we talked about how there's that one candle where it dipped below, and then that day ended up, pretty decent day higher. And then the next 3 days, the first day after was kind of a little bit slower. I'll make this a little bit bigger so you can see. A little bit slower, and then we got this like rocket ship action for the last 2 days, right? So this is just another consolidation day, and you can see that here. Like looking at the hourly chart, it makes it much easier to see, okay, this could set up another opportunity, because this looks like the exact same thing that you just showed, although it's a different time frame, where gold launches, consolidates, big launch, consolidate, big launch, and we're just getting this sideways price action. So maybe you don't get in today, but let's say the day is over and this is the new daily candle. Well, then you just be looking for price to set, to dip below this low, this previous day low, right? If there was another candle here, and then enter. So I don't think the opportunity in gold is gone. It's just, it's good to be patient and get in a good opportunity so that you're in a good. Here's one thing that I think is so hard to learn as a trader. You're positioning before the move happens so that when the move happens, you get to capitalize on it. And that even, I'm still like trying to get better. That's why you saw that this thing that I have drawn on here, right? This is to help me try and remember, okay, look, you're positioning down here so that you can capitalize, somewhere higher, and be in that move. And when you do that, you can have a stop and you can just ride the wave. It doesn't have to be a massive, you don't have to take a huge R multiple, but it is nice to have a little bit of a runner that is really capitalizing on a really big move.
And this is normally also where you make the money on, at least from my experience. You have all those small trades where you're maybe stopped out, very close to or stopped out immediately, or runs a little bit into your direction. Maybe you do something like you said earlier, you take some chips off a table, maybe move your stop loss to break even. And then every once in a while, you have these big trades where you can really catch a good move of maybe a couple of $100 in gold, where you really earn I don't want to say now a lot of money, but these trades are then responsible for a large amount of performance within your trading portfolio. Right. I think this is also difficult for new traders to accept, that sometimes you have those phases, of like 10, 20, 30 trades where you lose a little bit, you gain a little bit, and it's just, nothing is happening much. And then suddenly, boom, you have something going to the upside again, where you then think, this is why I do this. This is why it's worth to go through all of that pain.
That's right.
We're just now, by the way, numbers that came in the existing home sales. No, I'm lying. I'm sorry. It's still in an hour. I'm sorry. I have my trading view set up for a different time zone than I live in, so it's always confusing. So in an hour, we have existing home sales coming in.
Yeah, that'll be interesting to see. It's orange folder news, so like medium impact, but you just never know, is that going to be enough to push the market above this all-time high, or might it send it back down, and then maybe we can get some kind of, if you're looking for an opportunity, maybe that would be your opportunity, because tomorrow, right, Thursday, is the only high impact news event this week. I can't remember what it is. Do you remember? Flash manufacturing PMI. So other than that, it's either no news or orange folder news all week long. So
yeah. I mean, for Europe, we have, of course, the interest rate decision tomorrow still, but which is going to be non-event. I don't think they are going to lower the interest rates once again. Durable orders we have on Friday still coming in. That's something together with the existing home sales that I look always into, because it can be an early indication of where the economy is heading. But talking about this, last week we had retail sales coming in much higher than I anticipated. I really was very surprised. Once again, the US economy likes to do that with me. How strong things can turn around in the USA. It's something I like about the Americans. They have this mentality of things are bad, so no time to complain. Let's get to work and get stuff done. Whereas we Germans, we like to complain how bad things are, how poor we are, and everything is always negative.
Oh, that's funny. Oh, that's super funny. I'm just remembering that you were saying that you were in Minnesota when you were studying. What was that like from that perspective? Because I think there's a lot of Swedes and Scandinavians in Minnesota, and I don't know if people are positive. I don't know. It's hard when I'm from that area, so I'm not sure what it's like to be an outsider in that area,
So, I mean, in general, compared to the average Germans, the general American, is like very approachable, very friendly, very nosy is the bad word,
oh yeah, a little bit.
But I mean it in a positive
but
way,
friendly,
and they want to know about where you're from, what's your background,
oh,
and so
for
on
sure.
and so forth. And of course, especially in Minnesota, where you have a lot of Scandinavians. My host family's last name was Dahlberg back then. It's a very Swedish name.
Yes.
I should ask Jonatan about that, actually.
Yeah.
I mentioned it. And
everybody's name like that is, my maiden name is similar to what you just said. Yeah.
So in general, very friendly. Back then, I actually chose to go to the northern states because the English is clearer. I thought if I go to something like Texas or Virginia, I'm going to have a hard time getting around understanding. Bear in mind this was 1994, so back then there was the internet, but the very beginnings of the internet still,
barely.
with those 33K and 56K modems that made the weird noises when connecting via telephone, and so you didn't have email, WhatsApp, so I was forced to really talk English the whole day. And then after a while, you kind of notice I'm starting to think in English as well. I'm starting to dream in English. And when I came home, I had a very heavy American accent when talking German. So,
funny. That's so funny.
But very fond memories. It's really like it was yesterday, although it's already, 30 years ago.
30 years. Oh my goodness. That's wild. Well, I'm glad you had a good experience. I'm glad my home host was a good host to you. And I can't say I'm surprised. Usually Minnesotans are very friendly.
Anyway, also beautiful in the north at the Canadian border, where the nature is just really, really amazing. I can only really recommend going there. Also, Minneapolis, I think, is a great town. I haven't been there now for 20 years.
Yeah, 30 years.
A lot of 20 years the last time I went for a visit there, but I bet a lot has changed, of course.
Yes. Even when I go there quite a bit because that's where my family lives.
Yeah.
And it changes every time I go. It's different. Even, we were lamenting that 10 years ago I was there and there was no interesting restaurants, and now they're starting to get all these restaurants pop up. In Minneapolis there are a ton, but where I was, not so many. So all right.
I can see we have Victor in the background already, also eager to join us. And I think I have already a question for Victor, because I'm always to learn about quasi structures.
Yeah.
And I was looking at the hourly chart of NASDAQ and was wondering if what we see here is maybe a quasi structure in NASDAQ. I don't know.
He's someone to ask.
Victor says he's going to take a look at it in a short while here in the background. So let's give him another couple of minutes to get ready. Yeah, I can only say thanks again for being with me here. Dina, was as always a pleasure, and I hope we don't have to wait another 2 or 3 months again to be on the same live stream.
Yes, absolutely. Well, it was a blast catching up with you, and thanks for sharing about your strategy, and you're giving me hope to just, go ahead and push to get mine automated. I'm close, but it's still, it's still in the works. So, but that's a really impressive.
Thank you. While we were talking here, I saw like a long signal for the NASDAQ and an error message popping up. So something not working yet there completely with the automated setup.
You're going to use your automation on different, like on the NASDAQ as well?
On the NASDAQ and on gold, yes, for beginners.
I'd be curious to see how the results compare to just a long-only strategy. I'm sure you've tested that.
Yeah.
But that would be interesting to see, one account that was both, and then one that was just long only, and maybe forward test to see what that looks like.
Yeah, I mean, this is something you always have to beat, no? Otherwise, trading doesn't make any sense. If you earn 20% with buy and hold, and with trading you earned 18%, then it's not worth doing the trade.
Right.
Yeah, of course, we could always discuss then, but markets go down again, but the trajectory of risk on markets, especially stocks, is of course going up. I mentioned the average 8% we can expect from the S&P 500 per year.
And you could maybe capitalize even more on that if you, with the system that you showed. That means Victor's coming.
Hello. I didn't mean to interrupt the flow of the conversation. Go ahead, Diana.
No, all good. Welcome, man.
I totally lost my train of thought. That was quite the intro, Victor. Well deserved, though. Definitely deserved. It's good to see you.
It is indeed good to see both of you. I enjoy a lot streaming with Dirk because I learn a lot from him all the time, and that says something about his vast source of knowledge. And Diana, as always, I always say this, and I know it sounds like a broken record, but it's such a joy spending the time with you as well, because we complement each other, and that's something I appreciate.
Yeah. I love that everybody has a different strategy, and they're showcasing how different what we do is, that there is no one right way to do it.
Exactly. Yes. And I was just gonna show this on this stream, how to be profitable with a fork and a knife. Right. So there are many different ways to do that. No, that's just a joke, of course.
I'm also successful with a fork and a knife, but only when I'm eating.
You've probably seen on social media where they show a chicken that's past a funding company, and it's like, boy, we might just be making this way too hard. Oh, you know what? I just realized there's a bunch of chat in here that I didn't even, for some reason, it didn't update for me. So I'm so sorry if I missed you in the chat, if there were questions or comments. I thought it was updating, and I thought it was pretty quiet. Whoops. And now I see why. And okay, there we go. Sorry, I'm not trying to do that, but clicked on it.
No problem. Probably it was an auto scrolling, perhaps. I don't know.
How do you set that up? I need it to auto scroll so I can.
Like we said at the beginning, I also still trying to find my way with this new piece of software. Looks so great. Of course, the presentation is much more professional, but I'm always afraid I'm destroying some setups when I click on something at the moment.
We'll get better at it.
I think so, yeah.
Just need a little bit more time.
Not too long ago, I thought that one of the for you guys watching, I mean the two of you in this stream, there is on the upper left corner, there is like a sign, a button. I thought that was to minimize the left column, and instead of that, it is the back to go back out of the studio. So not long ago, I clicked on that, and it made me disappear. It was like magic.
Oh no, I bet that was a panic moment.
But we're in the same boat. We're getting I'm making sure that I don't click anything of things like that. Imagine finishing or not finishing abruptly, cutting the broadcast because we clicked on something that we were not supposed to.
It happens. We're human.
Exactly.
So Diana, you were you were asking Dirk about his automation, I think, about using it on multiple assets. And you, did I hear correctly that you're considering automate your system as well?
I have to. Sorry, that was for you, Dina. For your question. Sorry.
Oh yeah. So I have discretionary, or it's not really discretionary. I mean, I have a way that I trade, and I also have a system that is fully automated, but I push the buttons manually. So I'm still pressing buy or sell, but I have it. I paid a coder to create this for me. It was a system I designed, but I wanted a visual, just like we were talking about earlier. The visual I created, it was just rudimentary to say like, hey, this is a good zone. This is, you know, not as great, less great, and like, hey, keep, you know, don't get too excited up here. So it's, for me, a visual way to say like, okay, this is a full signal, this meets all your criteria, and so it's fully automated in that sense, but I still have to push buy and sell.
Okay.
So I'm looking to see if there's a way that I can get it automated for MT5, so that, but you know, MT5 has different system than, like, it's coded for me on TradingView. That's where I primarily chart. That's where I have everything. And so it's not a small ordeal to get it to cooperate with MT5 and, you know, have it automated. So maybe if you have some tips or advice for me, I'm open.
I haven't done it myself, but I think Jonatan has a system that is on TradingView. I think it's an indicator, or maybe he is doing something on TradingView. I'm not sure what exactly, but he has that those two linked where he does something on TradingView, and that I don't know if it's completely automated or not, in the sense that, you know, the signals are completely automated, but he has such a link where he's just watching and doing his stuff on TradingView, and the MT5 trades, you know, copying those trades or executing those trades that they're seeing. So I think it's very much possible. Just have to figure out the maybe talk to Jonatan, or, you know, figure out someone, find someone to make that bridge.
Yeah,
it's very much possible.
Coder calls it is a bridge.
Yeah. Look into Pine Connector. I'll send you the link later for
it. Thank you. Yeah, he had mentioned, the coder that I work with mentioned Traders Post, but that doesn't, it'll take signals from MT5, but it won't send it from TradingView to MT5. So it's just, you know, I'm working on it. I'll get there. But, you know, I don't mind pushing the buttons, but it would be nice if I could take more trades through the night and I don't have to be awake for it.
Yeah.
Then you can have smaller risk, and, you know, that would be excellent. So we'll see. But thank you.
I think automation is, we should always, because it increases efficiency, right? You don't have the time that you spend by monitoring manually, visually, humanly. The strategy is spent elsewhere. You could be you could be trading another strategy that isn't automated, or is more difficult to automate, and let that one, whatever that can be automated, because it just, you know, you're getting more done. And technically, well, it depends on the strategy, but if the strategy allows it, you'll have a better, you know, timing, execution, compliance, all of that.
Discipline
as well. And you know, there are things that will come in with automation that you still have to watch out for. But I mean, the upside is usually higher, bigger than the downside.
Yeah, the time freedom in and of itself. I mean, you can go do something, you can, you know, so that's definitely, I think, where I want to take it, at least for this style. But yeah, so a webhook, that's a good point. I know how to do that on TradingView, but I don't know how to connect that on MT5. So maybe
this is what you need the bridge for, exactly, to translate it. But yeah, let's. I mean, this is very technical, of course. Also already, I'm looking into also building something for myself, because I don't like to always be dependent on third-party software.
Right.
You know, when you set everything up, and when, I don't know, that company goes bankrupt or whatever, or changes the code base, when you are back to square one.
Yeah. Well, I had bought a bot at one point, and wanted to try and use it. But for me, it was very unnerving. I understood what the idea was, but at least at the time, it was very unnerving for me to feel like I don't really know what's going on here. With the system that I built, I know exactly what's happening. I know why it's giving me a signal, why it's, you know. So it is, I feel like it's better for me, confidence wise, to know what's going on fully, and that's not something you can necessarily get from, you know, like a box.
Very quickly, just because Interstellar Trading Community said here you can do it with AI to build a bot, a bridge, and so on and so forth. Yeah, you can do that, and it also works. But just one word, one advice: if you do that, what AI, all those coding tools like Claude Code, Cursor, and you name them, are notoriously bad in is security. So what you want to do after each step, you want to ask the AI, please check the code currently for security loopholes that are there, and you'll be surprised the amount of security holes that are in your code. Always.
Interesting.
Yeah, that is interesting. I know it. I have a friend who said that he uses ChatGPT to write. He is a coder, but he uses ChatGPT to write a code for him. And this was tricky because it relies on range bar charts, and maybe something like you use, Dirk, would have been easier. But TradingView does not support. I may be misspeaking, but basically because I used 2 different range charts, TradingView didn't like that. So it ended up being way more complicated, but I already had done a ton of testing and really liked it. And
it's
Pine
script, so the coding language of TradingView it's an easy coding language, but it has also great limitations. So if possible, I would always prefer to code things directly for MT5, so in MQL. But this is more complicated, and especially if your strategy is quite complicated, it has a lot of factors in the Lagranko charts, for example. Those are not native to MT5. So I have to code them myself, which makes it very complicated. It's something while I decided not to use MT5, for example, because I just couldn't get it working in a way that it's supposed to be.
What platform are you using if it's not MT5 for the execution then?
I use MT5 for the execution, but the signals are generated in TradingView and then via alerts and webhooks over a bridge, which is Pine Connector in my case, sent to MT5.
I see.
Wow, so complicated.
It is. Yeah.
I'm just here to trade. I don't know. Like, this is so crazy. Like, I'm doing my best, but now I'm like, I don't want to take on all that coding. You know, it's just makes.
But it's fun.
You know,
it's fun. It's addicting. You end up like sitting 10 hours in front of your screen because you just want to get this one bug fixed and the code working, and then you look at your watch. Oh, it's 2 a.m. at night.
Right. That's exactly it.
It is something that I've been working as well, because I've been incorporating or automating many of the strategies, and actually my main strategy, for example, is I'm still working on it to automate it. But what I did was, since the main strategy incorporates different concepts, which on their own has some edge, what I did is what I'm trying to do now is I broke them down into particular concepts and in working units, as in, like you have the quasi, you have the order block, and you can split them up. I normally combine them, but you can split them up and simplify it. It will not be the same signal that I trade, but I can still slowly but surely start building one working unit and then add another one, and then layers of complexity.
I think that's a good idea, man. Yeah.
And so that, one thing is going to also be, it won't take very long to have a finished product, although that product will be a interim product. It will not be the final product, but it'll still be a working product. So you can start getting feedback information from execution and things that needs to be corrected. That's what I'm doing. Actually, I'm very excited about it, because since I'm very rule based, I am perfect. My system is perfect to be automated.
Exactly.
And that just imagine you can. It's like doubling myself.
That's exactly it. It's better than doubling yourself, right? Because it doesn't have to sleep.
Yes, and not only that.
It doesn't make mistakes.
Right now, I trade only 2 pairs, because imagine if I didn't have that limitation, that would open up basically all pairs to be considered included. That will multiply my profitability just like that.
Yeah.
And I would do something else.
Sorry, go ahead.
No. Go ahead.
Does your each asset that you trade, do you have to make, like, for example, if I'm doing one on gold and I'm doing one on S&P, it's the same system that I'm using, but I have to change the range bar levels, for example. Do you have to do a customization for each asset with yours?
No, well, within the system, it already has input from indicators that are adjusting it for the pair. So it's auto adjusted to the pair, but there are still nuances to be made in the execution, because the pairs are different. Not they move differently, and so I still need to have. I need to backtest them, validate them, and perhaps the entries will be different. Perhaps some rules need to be adjusted. All of that I understand, but once I have a working formula, even if it's not perfect, that's all I need. I can with time start having more data and then adjust it as it goes forward. But my system already takes into consideration characteristics specific to that asset, to adopt the system towards it, or for it to work, to trade as it should. So I don't know if it's going to be as profitable. Perhaps not as profitable as it is with GU. I know a couple of reasons why that could be, but that's theoretical. I mean, maybe it's 60% as profitable, or 70 or 50%, but if it doesn't cost me more time, and if it is profitable, I will use it. I can add it up, and let's say you have, I don't know, a couple of extra pairs that can be used at the same time, even if they are half as profitable. If they're robust and consistent and stable, we'd be crazy not to use them.
Interesting. That's interesting. Yeah, thanks for sharing all of that, both of you. It's an area that I think probably is a good way to move into, but it is daunting. I mean, like you said, Dirk, a VPS. I didn't even know what a VPS was a couple years ago. I had to look that up. I mean, there's a lot that goes into it. So, but I do think you're right, Victor. It's like doubling or tripling yourself, and the superpower, right? You can automatically adjust. We can't really do that with accuracy ourselves, right? But
yeah, and it also gives you a lot of flexibility. I mean, you're not bound to the computer anymore, because
you got all this time suddenly on your hands again, but you would be staring at your screen normally.
Yeah, you could be doing other stuff at 2 a.m. in the morning while watching your no, but I mean, that's completely true, and that's in the end why, of course, I love trading. I mean, it's a passion. I would pay to trade.
Right. Yeah. We do pay sometimes, right?
I do pay to trade, but I mean, even if it wasn't a profitable endeavor, I would pay you just to trade. Yeah. Because I enjoy myself. I like the challenge. I like the expedition, the exploration, system build, everything. That's fine. But it does take time, and in the end, one of the other goals we all have is time freedom. And if the system depends on you watching and executing let alone executing it with the discipline it needs, just the fact that you need to be there limits in the number of things that you can do otherwise. So I don't want to replace it, because I love it. I don't want to stop doing it. I just want to be more effective, being able to do it better with automation, and even if it's not fully automation, doesn't matter. If it can automate a part, a section, a portion of my workflow, that already is better than me having to do it. I'm working on I have a couple of things. For example, you mentioned VPS. I have many VPSs running at the same time, and I'm all of them. And also, Dirk, you mentioned the copying being the copiers being, you don't want to depend on third parties for your copying needs, because if something happens to their server, because it's cloud-based, then that whatever happens to you. It affects you directly, and that's a risk. That's a huge risk. Imagine having a good portion of your net worth depending on that. That's a huge risk.
And it's also the danger, of somebody copying your strategy without your knowledge. I mean, they can always say, "Oh, we're not doing stuff like this," but how to make sure of that. And even if you find out that they do that, they might be sitting somewhere on the Seychelles or something like this, where it's almost impossible to take legal action.
Yes, and one of the solution for that is to keep it in-house.
Yeah.
Do not have it cloud-based. Have it a local copier. All my copying. That's why I have so many VPS. Is because all my local. I'm sure you wouldn't guess by the mask them, but I'm very conscious about all these things, privacy, and keeping my data safe, close to my heart, things like that. And that's one of the reasons why I make it, even though it's sometimes a lot more effort, because I have to monitor everything. If it's locally copied, I prefer having complete control of everything. So everything I do is locally copied, not locally where I am, but I mean on the VPSs. And I'm constantly looking for ways to automate that. And now I'm looking into some script that can do like easy, repetitive tasks that I do every day, just with one click. And I still want to see what it is doing, but it will do it for me while I just do other stuff. And automation is the way to go.
Yeah, that's encouraging. I got to work on that this week, maybe.
Guys, I have to make a move. Thanks for having me again today, and see you again. What is today? Today is
Wednesday
23rd.
Why do I always think today is Friday? I don't know why.
Yeah.
This feels like a Friday. Maybe because it's the last day of school here in where I live. So
is it really?
Wow. It's going to be home tomorrow. Maybe that's why I'm thinking that.
Yes.
Anyway, take care, guys, and catch you again latest next week, Monday.
Good to see you, Dirk.
Bye.
Thank you, Dirk. A pleasure as always. Take care. All right. Diana, I haven't had a chance. Actually, I didn't answer Dirk's question. Dirk asked me if on NAS, if there was an order block or a quasi. He asked, and I we were chatty. So
yeah, let's take a look.
There is. It's actually a very good one, by the way. It is. We do have. It is equities. It is NASDAQ, and we have been on a run. And so the higher time frames is positive, as we can see. This is the daily time frame, and it doesn't matter what time frame you go to. It still looks positive all the way. I mean, if you go very long term, of course, you're gonna see that positive drift that we talked about yesterday, that the equities in the end tend to have a strong tendency to just go up. Even while consisting of bear markets, they still end up going higher. That positive drift is still present. And regardless of that, on the daily time frame, what are we seeing here? So we do have the market structure being very positive, very bullish. We broke all-time high, and that can still fuel some time go. But on the lower time frame, as most of us utilize, there was yesterday, at least on the CFD, there was a bearish order block being created, right? And it came back to a bullish structure. So you got to watch out for that. That both sides have a comparable or equal hierarchy level time frame for the order blocks, right? Daily on a buy and a sell, demand and supply zone. However, it is something we can still use, even if it doesn't break and make a bigger retracement into a much lower level. For example, this order block, right? The first one has already been retested. So I would consider, even though that's an immediate retest, officially I can still trade it because it's an immediate. But the fact that it did have some kind of retest, even if it's an immediate, is something that makes me prefer to trade the other one. So there is still another order block that was created. So price can quite easily quite reasonably come back to the structure as it is as it continues with that upwards movement that it has been in for some time already. But we do have that order block on the D1. If we go to the H2, we have a beautiful quasi, which is, this is the head. All right, let me mark it for the quasi lovers out there. We have the head, the left shoulder.
Everyone's a quasi lover, I think.
The neckline, and then we have we need to, from the head to the lowest point, we have to draw that fib tool, and in my case, arbitrarily above 50, I'm gonna look for opportunities, and we do see one order block here on the H4 and nothing else. So that is the first area that I'm interested in, as you can see. And you can see we already have a reaction from it. Now, that reaction would be awesome to take a short from, right there. And we're getting into exactly that area. The only thing is that the reaction was cut short very quickly because of that daily order block. Mm-hmm. So it's very tightly squeezed into, a possible move down, but stopped right away by that daily bullish structure. So, but it's still, I think, something that could be used because the quasi is there. And if we go to a H1, there's also another refined area on the H1, which resides within the H4. That could be a great area as well for price to bounce from. And if we do get a signal, I think it's a very nice trade that could be taken. And since we have a daily order block here, and if we have the initial push, so it would be something like this. This is actually a very beautiful, courtesy of Dirk. There is let me go to the 1 minute, right? Be aware, you don't want to marry this trade because it is going short on the equities, and equities has been very bullish. So you want to have your stop in and be very disciplined with it. But if you get that initial move down, which already, gives you handsome risk reward ratio, you can extend it, because if this is broken, there isn't anything to the left basically in terms of quasis and order blocks to stop price to go all the way to the next structure. So there you go, 1 to 12 depending on what stop you get in, and depends if it signals and if it has follow through and all of that. But eventually it could be something you can upgrade and hold for a swing trade. I would recommend to close a position, half perhaps of the position on the daily at the end of the day, or maybe overnight, and let the rest run for that move, because that's not gonna be a move that happens. Well, it could happen on one day, but you got to be prepared for holding this for multiple sessions. So that's actually a very nice trade for those who are looking for an opportunity on NASDAQ. All right.
Let's take a look at the S&P. You want to give us an analysis on the S&P? And the reason I'm asking is because typically the NASDAQ and the S&P look very similar, and today they look quite dissimilar. So the NASDAQ was kind of in the middle of, I think it was yesterday's daily range, and the S&P is just popped above all-time highs again by like a tick a couple hours ago, dropped back inside, and then now poked just above and is now back below again. But we have the open coming in 2 minutes. So it'd be interesting to hear your analysis on the S&P compared to the NASDAQ and see what differences and similarities there are.
That's a very good one. What we can see here that both of, actually, let me do the S&P very quickly, very simple, breaking it out into order blocks. We don't have anything on the monthly. We did create an order block there, a fresh one that is still fresh. And this one was used as a second attempt. Typically, I don't take those. That would be the attempt that I take on that order block. But it did create, and it hasn't come back to it. So it doesn't give us any opportunities yet. But it does tell us that who is in control, and they're the seals that they are, not the seals, the crumbles, or the evidence they leave behind, the footprints they leave behind, by being in control. So what do I have is on this time frame, we do have a bullish quasi, but price hasn't come back to retest any of it. And if you ask me what I'm talking about this quasi, of course. And is it a quasi? No, it isn't in this time frame, so I have to take it off. But we do have some structures below us, but that's not going to help us get a trade today. So I'm gonna just mark it, but continue on for the lower time frame. Let's see on the daily, what do we have? It's just going up and up and up after taking out that structure we had from the left. Let me take that off the chart, of course. You know what it is, Diana, for my strategy. Since I wait for retracements, when price is going in one direction and it hasn't made that retracement yet, I typically will not have a signal, because I will have like structures to leave behind that in the case it comes back, then I would have a possible opportunity. But in this case, what I see is that the market is not coming back, actually. Almost doesn't at all. If I look at the very near time frame, near like recent time frame, we had that that would be a perfect opportunity for me, right? It creates that order block, comes back, and I will be looking in that wick to get my entry. Actually, this could be a trade for you as well, with your lower, the taking of the lower low, the previous swing low, and then coming back into that same area, and then shoots
last night.
Oh, it is nice.
Ooh, but
nice.
would that be considered, for your strategy, would that be considered a second test now if it comes into that level?
No, it will be still a first one, because this immediate one, I consider it, if it is on the very next candle, without creating, what I mean by creating a space is the order block was created here at the close of those two candles, and in this candle, if it comes back and touches
sorry.
I thought someone was coming in.
No, the market's open, so I'll turn, or not open, but the New York session open, so I'll pause my alert so we don't have to.
No problem. I was looking to see if Jonatan perhaps has some new sound effect. To announce his entrance.
It sounds like a fairy, though. That's the only thing. It's kind of like a little handbell or something. Doesn't that remind you of that?
A little bit, yes. But coming back to the charts, the order block is created when we had that close, and if in this candle, the next candle, if it touches this, it didn't leave any space, right? A space meaning a space where that hasn't, the price is the low of that candle does not get visually into the order block. That is space, and if it doesn't have space on the very next candle, it's an immediate retest, and that retest typically what I have found is that it does not change the effectiveness in the next time the order block is retested, right? So that officially it's the second retest, because there was an immediate retest, but I consider the second retest after an immediate retest to be a first retest. I know it sounds a bit confusing, but it does help me that I do not consider that to be a retest, even though obviously it is, but I don't consider it to be a retest that allows me to discard the structure to be as a signal. So I would still trade it if it comes back within a certain number of bars since its creation to that area. But I would be very much interested in that. If we go to the H4, let's see what we have. We did have that was yesterday. Yes, actually there was a London session. I wouldn't be interested in something like that, because that's simply not something that I would trade, at least not on I wouldn't be trading it. I already see, because this is the structure. I need alignment, and then the H4, this is the structure that needs to be respected. I would still be able to, let me double check if there is a reason for me to take a signal from here. There wouldn't be a reason on this time frame. This one, however, no, I still wouldn't be able to trade that. No, I wouldn't have triggered me. But okay, it doesn't matter. Coming back to the comparison you wanted to make between S&P and NASDAQ, we did. Let's compare if we both of them have they both of them have a daily structure that indicates that, we could continue to go higher. That's this little thing here, from where we could continue. And let me get that. But I do like the price action from the S&P, at least on this price feed, much more clearer, much more cleaner, much more decisive for the continuation. On NASDAQ, we had a bearish order block being created. And on S&P, we don't on the daily. No, that means something. That means that one is more bullish than the other. That already, if I have a long setup on both, that tells me I want to do it on S&P and not take it on NASDAQ, right? If they're everything else being equal, that I want to be, if I have a long position or a long setup, long idea, I want to be in the one that doesn't have a bearish structure to stop it, potentially. So that's one thing. So I like S&P in that respect better. But that's on the lower time frames. I don't actually there is a little quasi right here that I didn't see before. And the market is actually having a very nice reaction to it. It's on the H2, and I'll explain to everyone what I see, which is we do have a reversal pattern being created right here. You can see we have that would be the quasi on the 2 hour. Let's see on the 4 if we have a reason. The 4 does have a reason, and the 4 is actually down here. So you have a reversal pattern on H4 and H2, and of course it's going to be visible on H1 as well. And this is the last structure that needs to be defended for that quasi. It is quite strong, that move up. However, if the signal comes, I will take it, no matter how strong or not it came or retest this area. So that will be the H4, the H2. And if we go to lower time frame, maybe we can look at from the 15-minute and see if we can find some reversal patterns. This one is gone. So if anything, it would be something like this from this area, but I don't see anything. Let's see. Actually, there is a very nice area here. So yes, I would be able to take something like this. This would be a nice one. So on the 15 minute, we have over 7 minutes to go. So if it creates a bearish order block here on the 15, and it comes back, so it needs to do a couple of things. Okay, so it needs to close below the open of the this bar that I'm indicating. It needs to close below on the current candle, so in 6 minutes and 50 some seconds, and then come back. Hold on, and then come back. Let's say it ends where it closes right there and needs to come back to this area. And then you're going to be looking on the lower time frame, or maybe even on this time frame, for that move down. And if you do get your signal, you put your stop above the whole structure, above this high with a little bit margin. How much margin you decide, and you target something that makes sense on the lower time frames. Maybe this order block right here. That could be already something that's a nice trade. That has a good probability of working, but if it keeps on having a bigger reaction, then you can even hold it for maybe the structures a little bit lower, and that's even without breaking the H4 trend. This is just within the trend, so I like that. You're not for my TP to be hit. If this were to be a trade, I do not have to. I'm not expecting the whole market to shift. It's just a little retracement in a bullish structure as it continues. I like that because it makes sense. It puts me in a higher probability camp, and that's what we want to be in. So if comparing S&P and NASDAQ, I'd be more interested in going long on S&P, but currently it is retesting a very interesting structure. As soon as the H2 closes above that level, the level is 6,341.6. As soon as the market on H2 closes above, all bets are off. I wouldn't want to have anything to do with it.
That's great, Victor. Thank you so much. Do you typically, so the two that you use, the long short tool, those were very large R multiples. Do you typically take large R multiples, or do you split it up so you have some quick, lower R multiples, or that's kind of that?
Yes. I have actually just one entry, but all my entries have that possibility if the higher time frames are also in alignment, but I would need a confirmation on those time frame to target their TP. So if that doesn't happen, if the higher time frame doesn't confirm but the lower time frame do confirm, then I will only have the lower time frame TPs, meaning my targets are going to be based on maybe just the structure, just the quasi on the minutes, or maybe just to the next H1 structure. But if I do see that there is H4 confirmation, then I understand that as a sign from the market telling me that the H4 is also playing along. And if the H2 is the H4 is playing along, then I'm allowed to target H4 structures. So that means that I'm gonna have actually this is moving nicely as we're speaking. Mm-hmm. Look at that. We didn't have the position, not the sequence yesterday. Actually, let me go to a very tight area to see if we have no, we didn't. I would be interested on the 1 minute, I would be interested in price coming back to this area. It hasn't done that. Let's see on the lower time frames. No, it hasn't. Yeah, I wouldn't be maybe on that. That would be some area, but it didn't reach it, at least not yet. We'll have to see that later. But coming back, so what will happen is when I have the higher risk reward ratio is that I would have, let's say, intraday a target, usually one, sometimes two, and these targets need to be in principle be hit that day. I may have a little overnight if the entry is late in the day, and if the higher time frame signals, then I'm allowed to leave the rest of the position open for that bigger risk reward ratio. As we indicated here, the intraday might be something like 1 to 6, 1 to 5, 1 to 8. And then the higher time frame, depending on what the alignment is, how extensive that alignment is, it can be multiples of that. 1 to 15, 1 to 10, 1 to 50 sometimes. Doesn't happen very often, but sometimes even I catch sometimes close to 100 and even a few times above 100, 1 to 100. Wow. They take a long time to come to fruition, obviously. Yeah. But I mean, you don't have to take many of those to understand that you want to take them, even if they occur seldomly. I mean, they are amazing. You can pass if you're in an evaluation. You're gonna pass the challenge way before these hit their TPs.
I think it's important to recognize too. You kind of mentioned it, but they don't come around as often, right? Those opportunities are rare, and also there is likely a tendency that they won't work, right? Yes. You get a huge benefit from it, but you have to kind of pay for admission multiple times.
Exactly.
And that's a trade-off that you have to make.
Yes. That is absolutely right, I think, to point that out, because 1 to 100, mathematically, we all understand that you're not going to have a 50% win rate on those trades. That's not going to happen. I mean, that's not possible. So it's going to be way, way lower. But two things. One is if you're trading with edge, it's not going to be 1%. It's going to be perhaps 15%, maybe 20%. That's already is very high, by the way. That's one thing. The other thing is that because I use them combined, as in it's the same signals for the intraday as well as for the longer term, If I have a signal on the daily, it means that I banked on the intraday trade already.
Mm-hmm.
That means that from that trade, I'm already in profit.
Right.
So
Yeah.
psychologically,
Mm-hmm.
it is very easy for me to accept the loss that comes from the lower win rate on the daily and the weekly, because my equity curve is still going up because I bank profits.
Yeah. I think that's a really good way to do it. I know when you're first starting out trading, it's really hard to divide things up like that. But I think that's a really good way to do it when you can get the hang of it, because basically what you're doing is you're paying for part of the trade with one trade. It offsets it, and also the cost, but also the reward, right? So that huge one is going to pay for the fact that, you know, you only got a little level to level win on another one, and kind of diversifying that way is a really effective way to make sure you have your bases covered. You know, instead of like, you can also do that maybe by trading multiple assets, but I think the way that we've been talking about doing it is a little bit easier once you can sort it out.
Well, my best advice is to start simple, right? This is a couple of layers of why doing it. It makes it more complex, more possibility of making errors. Identifying the setup is sometimes difficult enough. Holding it with just TP is already difficult enough. So what I'm talking is, you know, someone who has been in the market for some time and is confident in doing all the other things already well. But my advice would be start simple. Just for example, set and forget. Very simple, very easy to execute. And then you build from, once you have one thing, you have mental freedom to, you know, start looking for other things to add. And maybe it might change the signal or the system, you know, completely, or it will be just an add-on. In certain situation, you will do this, like you do. You mentioned yesterday that it, depending on what you see and the signals the market gives you, you start adding on. Right? That's an advanced strategy, an advanced technique. That's not something that needs to be done by someone who is just starting out, because adding messes up with your risk-reward ratio, with your risk, your average entry price, because you're going to have an entry price which is depending on how aggressively you enter and at what time, and all of that. It makes it, you know, n times more complex. But it is more profitable if you can do it, you know, if you know what you're doing, and if you found a way to add, you know, to extract more juice from that one lemon that you have, for so to speak.
Yeah, and I think to your point, it's not necessary. It's an advanced technique when you're ready, but it isn't necessary. So you can definitely do, you know, did you call it fill or kill, or am I just thinking that? But set it and forget it. Yeah, if it's a set it or forget it, that's a great way to do it. So you have to make sure that you're risking appropriately and taking valid trades that fit your system. But absolutely, you know, you can just leave it alone then, because typically, especially in the beginning, but oftentimes you're going to do more damage adjusting your stop than you are just let it play out. You know, it's a great tool to develop patience as well. And, you know, sometimes it's gonna go in your favor, and sometimes it won't. We remember the times that it didn't, right? Like, those are the ones that really sting. But the reality is, more often than not, probably it's going to go in your favor, and you just have to be okay with it. So,
yeah, that is absolutely true. You said something very powerful that I learned through, you know, the hard way, with pain. That is, the more difficult you do things, the more chances you have of messing things up, the more ways there are for it to go wrong. So the best way to start is just keeping it very simple. So simple, you're not even gonna believe it that that's supposed to be a system. But that is a good thing. If you have something that looks very simple, don't discard it because it's too simple. Don't try to make it complex because it's too simple. That is actually something you want to cherish, that simplicity. So and you only want to put that other layer when you are completely sure and confident that this strategy, or this concept, it can be only a tool as well. That thing that you're adding to that part of the system is profitable, and then you can start looking, okay, what if I add something to it? And you don't even have to, but you could start considering, okay, how can I do this perhaps more efficiently? How can I do this perhaps with the same risk, but I can use the initial risk that now is eliminated because I moved my stop. How can I add another unit of risk and use the same entry, that same opportunity to gain more, maybe double, maybe triple, right? Like you're doing with your add-ons, right? That is definitely the next step, but it's really something to be considered just after doing the first ones well.
Right, absolutely. Victor, there's a couple comments in the chat that I think we should cover. Let me get this first one up here. So the question is if I trade mainly in the New York Open, and I do watch the New York Open quite a bit, quite carefully, but I prefer if I can get a trade in the Asian session, so that I'm already positioned by New York. But oftentimes it depends on what account I'm trading as well. There are often good opportunities that come in the New York session too. So those are my main two that I trade. I'm sleeping for the London session, so I don't trade it. But M7 also asked, is the New York session safer to trade, less liquidity sweeps? Because I tend to focus on the London session. I don't know. If anything, I don't know for sure, but I would almost think that there might be more, just because there's more volatility in the New York session, but I don't know that to be true. That's just a guess. And I'm not as familiar with the London session because I only trade it when I'm up way, way too late or, something like that. But what do you think, Victor? I think specifically this is a question about the indices, probably.
Yeah, I do trade. I do have positions on the indices, but they are not the strategy that I talk about usually. So if I stick to the quasis and the order blocks, since I don't trade the indices, I wouldn't be able to answer that. That's my honest answer. However, what I can say, if I use the Forex as an example, yes, New York Open does have a lot of volatility. But that's not necessarily mean it is easier to trade.
Right.
The same as the London Open. There is a surge of volatility, and yes, you can catch those big moves, but that doesn't make it the easy trade, the lowest hanging fruit. So a lot of times, for example, you have some fake moves at the beginning of the sessions, London and New York. You'll get one move in one direction with all the signs and characteristics that this is going to be the move, only to be reversed in half an hour, and it goes way the other way, like turtle soup.
Yep, absolutely. I think every session has its own characteristics. So for volatility and volume, obviously the New York and the London sessions are great. The Asian session is a little sleepier, and that can be beneficial too. It's not going to move the same way as New York, so you probably can't do exactly the same thing with the same expectations. For example, a tighter stop might work great in the Asian session, but you might need a larger stop in the New York session, but you're going to get a much larger move in the New York session, whereas in the Asian session, it's going to be a much smaller move. So it really just depends kind of what you're looking for. But here's another comment that is interesting. I'm also finding trading draining. I got the second phase of high stakes twice in a row. I just can't seem to progress consistently. It must be how I enter. Sometimes it works, sometimes it doesn't. And I feel this comment because trading drains me sometimes as well. I'm like you, Victor. I love it. But there are times where it just feels like it's, you're just treading water and it's so exhausting. But also, I think this is part of the process when you're trading in general, but even funding companies. There is sort of like a process that you have to go through from you don't know what you're doing at all to, okay, now you have an idea of what you're doing and you can pass challenges, but then, that consistently profitable is even beyond there, or like getting regular payouts. That's beyond there. And there's, sometimes you move ahead, but then sometimes you fall back a bit and then you move ahead. So hang in there. What kind of wisdom do you have, Victor? The best that I can say is like, look, I've been there. Sometimes I am there. It is exhausting and it can be really difficult to deal with that. And the reality is trading is sometimes it works and sometimes it doesn't. So really coming to terms with the fact that is just the way it works is really important.
Yes, I think the key word here is expectation management, because apparently you're expecting something. This user, who is a regular from our community, by the way, apparently he is expecting something that he's not getting, right? He's expecting to pass perhaps second phase with a certain probability or a certain speed. And it's not happening. And the management of this expectation needs to be based on, you can guess it, data, right? What does the data tell you if you were keeping everything equal? And that depends on whether you have a rule-based system or not, how reproducible this exercise is. But the way to manage your expectation is, okay, I'd imagine if I started the challenge on the 1st of January, what would have happened? And imagine if I started last year, 1 of January, and then another date. Start 20 different dates and see how many of them you pass the first challenge, how many of them you pass the second challenge, and how many then you would now already be getting payouts from, and how many those payouts are. You get data on your strategy, how they would have performed, and then you have an actual data-based expectation, which you can, actually expect. Because let's say if you started every month for the last 20 months, you started a new one, and at 60% of the accounts you pass the first star. Actually 60 perhaps is not, it depends on the strategy, but let's assume it's 80% you pass the first phase. And then from those who get to that phase, right, that 80%, let's say half of them you pass this phase 2, right? That tells you that basically the chances of getting to funded from starting on the second phase is 50-50. So it's not 100. You still have a chance, but it's not 100. So you can base your expectations. Okay, well, I got this time to the second phase. It's gonna take me on average 2 attempts to catch one, because it's 50% a chance. So once you have that and you actually fail, say, well, I know that's able to, a possibility, because the chances that me getting from the second to funded is actually a 50%. Yeah? If you have data, then you can make it much more easier, and it doesn't drain you as much, because you know in advance what to expect, and it's not based on just optimism. Although I always say you have to be very confident, you have to be very optimistic about yourself and believe in yourself and all of that. But in the end, you have to be realistic and base the things on reality, on the data. That would be my advice.
Yeah. Well, and Dirk had a really good, he shared with us earlier when he passed the challenge, and he laid out the statistics for us specifically, which I think is great because it's super helpful that we can talk about that. Mm-hmm. He said that he does a set it and forget it strategy. It's automated, like we were talking about. Mm-hmm. It's a 1R risk mm-hmm. and 2R reward. So a mm-hmm. 1 to 2. And he said that his win rate is 58%. 58% nice. With a 1 to 2 is profitable, right?
Yes.
But you can imagine that, I almost wish that we could cut off that last trade so that we could stretch it out and see what it looks like, because his equity curve was just super small. And it's kind of like if you think about like climbing up a mountain or something, or hiking up a mountain, and you feel like, oh my gosh, I haven't made any progress. And, you're still going. And at some point you look back and you go, wow, I actually did cover a lot of ground, but it doesn't feel like that every step of the way. So if you know that you have edge and you're following your statistics and you're risking appropriately, being as consistent as possible, hopefully you can, remember Dirk's visual that he showed us, that it's just like slow and steady. We all want to kind of like get there fast, right? I'm guilty of that too. That's my personality. I want to move fast. Slow and steady doesn't feel like progress until, you're at the top of the mountain and you look back.
Yeah, actually, I think this is, we don't, too bad. It's a pity we don't have more time, or time has run out. But what you're saying is actually a real thing, a really, really very true thing that I think that is something, we perhaps all of us share, that we want result, and we are a little bit impatient, and we want to see things now. And you might see your equity curve going something like this, and it doesn't look like much. And you think, well, this strategy sucks. But in reality, there is a upwards trend that you're following, and maybe you're not aware of that, and you may lose patience halfway through because you're thinking, I am already, so many weeks or months away, and I'm still back at break even, like in that equity curve. But in the end, you're missing the point. The average, your expectation, the metric, the statistical expectation of the strategy is positive. You have an upward sloping trend, and you only need to keep on hitting that. And yes, it may take long, but who cares? As long as you're moving forward, that shouldn't be an issue. And it is very easy in a strategy like this to lose faith in confidence in the strategy, and start causing it to lose its edge by sizing up, by being impatient, and by executing it the way you shouldn't, and then you make it fail. It was fine, but we make it fail because we couldn't manage our expectation according to the data, the actual reality, because we want the graph, the system, to adapt to our expectations. Doesn't work like that, right?
If only.
If only, yes, if only. If only it would be that easy, then we will all have, all the traders would be getting payouts, gigantic payouts all the time.
Yeah, but the key is, don't underestimate your success. If you're climbing up that mountain and you're right there, it's like, well, your trajectory is upward, so you'll get there. Maybe there's, maybe you'll find ways to take more trades with limited risk, and that could change things. So just come back and commiserate with us, because
definitely
hard and it can be draining for sure.
It can be draining, and there are a couple of things that you cannot avoid. One is the sacrifices in time, in effort, in money, the effort you have to put in, and sometimes the pains you have to. It's not fun to talk about, but it's reality. The pains that you have to go through to become a good trader. Sometimes you have to learn the hard way. Haven't we all had a big loss that taught us something very important, right? So it's those things are unavoidable, and in the end, you'd actually be grateful for them, because they made you the great trader that you will be. In that, futurely, hypothetically speaking, assuming that that is you, and I'm talking out of optimism here, but you'll look back and say, wow, it wasn't fun, it was draining, but look at me now. Now I'm thriving, I'm happy, I'm successful at this, I made this or that milestones, so anyways, that's what I wanted to say, and we have come to the end. Man, Deanna, this has gone way too fast. Someone fast forward something here. I cannot believe how fast this hour has gone by since I came in.
Well, it's always a blast to hang out with you, Victor, and It's great to hear about your strategy. Thank you for being such an open book with us and sharing so much. We really learn a lot from you every time we come together. So looking forward to seeing you next time, Victor. Take care, everyone in the chat. Thank you so much for being here, and we'll see you soon.
You are so kind, Diana. I'm grateful for you.
Oh, same. Very much the same. Thank you, Victor.
All right. See everyone soon. Tomorrow we have another stream on YouTube, and in about 40 minutes we're going to be live in the Discord community. Get your chance, get your entrance, just one account and you get your entrance in our Discord, a workshop. It'll be held today by myself. I hope to see you there. All of you, keep safe and see you next time. Bye-bye.
Bye.